the world's first beyond borders ecosystem. So what differentiates D Globalist from accelerators, events, or government programs globally?
I think it's a managed approach. We have limited our intake to 200. When we started this, we decided to limit to 200 so that we can manage the community well. And the second thing, which is different from any other cohort in the world, is the common mindset of the founders. Every founder you see here comes with a global mindset. And the third thing which makes us very different is the collaboration with the Forbes India. Whenever any company is moving, they need help on different sides, including the branding, including the business connection, including the funding. So we bring all of this together in this ecosystem. Yeah.
Great. And what makes an extrapreneur, DGEMS ready, I guess? What are one or two traits that you screen for, and maybe what are one or two things that sometimes are missing?
Well, I've been asked this question by a lot of founders when we speak to them to understand their business model and whether they are a fit for this cohort or not. One common thing which we look at is the fact that they understand that the barrier to expand is cognitive, and the fact that they can remove this barrier through the community itself. So this is the common trait. They're open to learn, even if they are a unicorn founder. They're open to learn, they're open to collaborate, seek help, and also help the other founders.
Wonderful. So let's talk about what geopolitical scenarios impact the cross-border opportunities for founders.
Well, there's a lot going on in the world, and we get to see this by talking to different founders who are already there in multiple markets. There are a lot of founders who were limiting themselves to one country, and they started facing challenges with the tariffs in place, especially from the US side. They then decided to move into different geographies. But then there were founders who were already global, and they kind of pivoted very quickly into the markets which already had a set customer base for them. I think it's very important for founders to know that which markets are consolidating, including the KSA and the Middle East market. It's going well with the Indian market already. The founders here, majority of them are having base in Middle East. And they also should know which markets are splitting, especially the North America, Canada, and US. They're splitting now. In terms of geopolitical scenario impacting entrepreneurs, we see this as an opportunity for the founders, because these all founders are limitless. So when you're limitless, you will pivot very quickly and you will expand into different geography wherever the opportunity is.
Particular parts of the world where Indian founders are pivoting to now, or more focused on, that you're seeing?
Well, stats, 20% of our companies from cohort 1, they were looking to expand to Middle East. It increased to 30%. Now it is over 50%. So Middle East is a home ground to majority of our founders.
Great. So you're launching Extrify this year, which is a digital network for select 200 founders. How do you see Extrify changing what DGEMS means to its community once this event ends?
I think it came from the feedback from our alumni. A lot of founders, they wanted to connect with each other after the cohort. It's a one-day cohort which we've organized in the past. What about the remaining 365 or 364 days? So we thought about this carefully, and then we decided to work on a platform dedicatedly for our founders. I think our team has worked really hard for this, and we are launching this in January next year, where we would onboard every single founder of this batch, and the invitation would also be extended to the previous batches. The beauty of this platform is they can collaborate knowing that who is the right founder in the right geography, in the right sector, share their connections with them, and seek connections from them as well.
Great. And so if you zoom out, where do you see the global founder economy heading in the next decade, and how does DGEMS fit into the future dominated by extrapreneurs?
I think we are the ones shaping the global founders community. I mean, this is the largest community proudly we have. And in next 5 years, I would say that after speaking to a lot of founders, the world will become borderless, and the ability of a founder to do business in international regions would be as good as as they are doing in the domestic boundaries. The major change we have seen in the last 5 years is the ability of a founder to talk to their potential client, partner, investor, sitting remotely thousands of miles apart. And not only they can talk, but also close a client sitting remotely, which means the world is already borderless, and anyone who is leveraging AI can short down their journey of gestation in any international expansion. If somebody was taking 6 years, they can do this in now 6 months using AI in place. So, answering to your question about where is the future, I think the future is borderless, and the future belongs to those who would remove the cognitive barriers.
Great. Maybe I'll finish with just the last one on, any shifting that you're seeing in the markets in terms of the sectors that are maybe more rapidly expanding, going global, and I have to just quickly throw in, impact of AI. Is that changing maybe some of the industries or some of the dynamics that you're seeing from the founders?
I think I spoke to a founder who was 70 years old, and he was learning AI. So we have seen even the traditional businesses adopting AI. And AI would not be a sector per se, but enabling act for founders to scale globally. In terms of sectors which are picking up outside of India, though it's a sector size agnostic forum, but I think deep tech is super high when it comes to cross-border expansion. We have seen a lot of our deep tech companies raising funds from global VCs and also at the same time catering to different clients outside of India.
Yeah, amazing. Well, we're very excited. I'm sure the rest of the day is going to be fantastic. There's a great program, so excited that we can kick off with this chat and look forward to continuing the conversation.
Thank you, Ron. Let's have coffee shots after this.
Definitely.
Thank you very much, Ron and Devesh, for those invaluable insights. Well, as today's ambitious entrepreneurs chart their global journeys, they face both challenges and immense opportunities. Up next is a session you won't want to miss on the theme Cross-Border Breakthroughs, How to Win Global Markets from India's Next Global Leaders. And to moderate this session, please join me in welcoming back on stage Forbes India's Deputy Editor, Neha Bothra. Neha, can we have you back on stage? Let's also invite our distinguished panelists. Please welcome our first panelist, Rajan Chaudhary, co-founder Leap. Rajan, a big round of applause for Rajan. Please welcome our second panelist, Pushkar Mukevar, co-founder Drip Capital. Big round of applause for Pushkar. And last but not the least, please welcome on stage Vivek Agarwal, co-founder Square Yards. Over to you, Neha, all yours.
So is the audience enjoying the afternoon already? Can I hear a yes? Everyone up and awake? All right, so now we'll start the panel discussion. Just to set the context, I want to ask a common question to each of you. What was the most difficult decision you made, and a decision that actually proved to be the turning point in your respective journeys as you embarked on your global ambition? Let me start with you.
Okay. When we started Leap Finance early 2020, we did few sanctions, less than 20 sanctions first year, and then COVID hit. At that time, we were thinking that should we take the risk of doing more sanctions, and then, or should we pivot to something else, because we recently started. Our first team member came in December of 2019. In a matter of 2 hours, we figured that there is a clear opportunity in study abroad, and we started the pilot, I think, within a week, and that actually went really, really well for us. If I have to just recall one bet which went really well, I would say it's that.
Pushkar?
Sure. Yeah, I guess just to maybe give a quick context, so we are a trade finance platform, and we started the business primarily focused on funding cross-border trade for Indian small business exporters. And I think the idea was to always build a global platform. And I think, and I'll actually talk about, some of the things we also learned when we sort of went on this path of global expansion. And there were two markets we entered pretty much together. One was US and the other one was Mexico, And I think I would say we obviously expanded in the US and we scaled Mexico, and at some point we pulled back from Mexico. And I think the single most important learning from that was US was a market we actually understood. A lot of the customers who came to us were mostly organic. So while we were funding all these exporters in India, many of them were actually shipping to customers in the US. Those were our initial customers. So the market entry was a lot more organic for us, and because the customers were asking for our product, we could see that we understood the market, and of course, given our founder backgrounds also, we had spent a lot of time in the US. So I think to me, and Mexico for us was culturally a very, very different market. It was also a challenging market. And I think the single most important learning was the fact that, if you understand the market culturally and you understand the customer pain point better, that I think is pretty critical when you're looking at expanding beyond borders.
Vivek, coming to you, and if you can tell us again what the important decision you made was when it came to actually having your first beachhead company in a country outside India. And of course, how did you know that the decision was the right one?
Yeah, Neha. So let me give you some background about Square Yards. So Square Yards is a 10-year-old company. We are primary real estate market player. So right from search, discovery, transactions, home loans, interiors, rentals, property management, we cover the entire gamut value chain of real estate. So our company actually started overseas. It was started in Hong Kong when my co-founder Tanuj was there. He was based out of there. So, and we expanded quickly to other countries. I'll talk about that journey as well. But one of the important decisions that we took early on was to set up a very large base in UAE, especially Dubai, and that has worked for us quite well. So Dubai, we don't consider Dubai as something which is like outside it. We consider it's like the 6th Indian metro. And considering the large population, Indian population based out of there, it was always easier to get talent. And the market there is also as disorganized and as fragmented like in India. And Dubai, also from a real estate perspective, it's similar to India because the primary market, the new developments which is happening there, is similar to a city like Mumbai or Gurgaon. So it was a cultural fit for us. This was the best decision we took. Dubai now contributes almost like 15% of our total volume.
Interesting. I'll pick on some of those points as we progress in the conversation. But coming to you, Pushkar, you mentioned that Mexico was an important country for you, a tough one to crack at that. Tell me a bit about your experience when it comes to cross-border financing for SMEs. What has your biggest learning been, and what would you say was a standout factor in your playbook that helped you to succeed?
Sure. So I think when it comes to small businesses, while of course culturally each geography is different, but I think one realization we've had is that small business challenges tend to be very similar. You oftentimes have businesses where there's basically a single owner who is managing multiple things, and access to financing, actually not just in emerging markets, but even in a market like the US, access to financing still continues to be a challenge for many of these small businesses, right? So from that standpoint, just understanding our customer base and understanding the fact that these businesses are wearing multiple hats, and really what matters is, can you create a very seamless experience for them to avail kind of almost like a one-click financing solution. That was very critical, and I think that is the kind of ethos with which we've been operating. However, I think the learnings have also been that each market from a regulatory standpoint, from a risk management standpoint, cultural standpoint in terms of how legal enforcement happens. Those are also sort of nuances which we have to watch out for. But the fact is that while culturally each market is different, there's some homogeneity in the fact that most SMBs face very similar challenges. And what they're looking for is also somewhat similar. So yeah.
Rajan, you know, every time I speak to founders, they tell me that one learning that stands out in their journey is the ability to focus. You focus on one thing, you chase that goal, and you don't disperse energy. Now, if I understand correctly, when it comes to Leap, you have multiple revenue lines, right? I mean, you have counseling, you have loans, you have test preparation, and many more. Tell us a bit about what the audience can learn when it comes to learning how to focus and having new business lines. How do you do that?
So it's true that a founder and a company should actually focus on one thing like really, really well. We actually had a like fortunate situation where Arnav, who is one of our founders, and then Vaibhav, they have like a very, very strong background. So like Vaibhav have very strong background in finance. Arnav understands product and this education market really, really well. So we initially decided that like since we have the leverage, we can actually divide the focus. So Vaibhav actually started focusing on Leap Finance, building Leap Finance, while me and Arnav, we started building Leap Scholar. We got an opportunity to acquire a few companies, and we were like very, very sure that like this could be the next Leap, because like, the kind of leverage which we will get with those acquisitions, we should get it. So then the problem became that how will we focus on so many businesses? And till that time, like we were not global. We were just India focused and US. So the only framework which could actually help us was that we need to find the right people for that. And I think there our investors, early investors actually helped us a lot over there. And I think, and the platform like these actually helps a lot, I would say. So anyone who is planning to do multiple things very, very early in the journey, we need the right people. And investors and the platform like these will actually help us get that. Luckily, we got the right people to manage each of these businesses here. And then it was about going globally. From day one, we had a global mindset because like we are part of the business in India and in US from day one. So we knew that we are going to scale it. So today we are in more than 19 countries around 4 different continents. So we knew that we are going to do it, but like since we had the leverage and we clearly had the global partnerships available for the study abroad business, we thought we should just launch globally. We tried launching 6 countries. I think that's something which I would not want to repeat again. So our first international launch was 6 countries, around 4 different continents, which is very, very difficult to manage. Again, then like we started scaling to Middle East, like everyone else said, like they are culturally almost same as in India. Scaling over there was not difficult. So I think, yeah. So the right people getting all the help from the platforms which are available around you. And if you have enough energy left with which you can focus on other things, I think if you have all these 3, that's the right time to scale, I would say.
Interesting. So how many founders do we have here in the audience who are trying to build new business lines? So not necessarily the core area, but ancillaries around that. Do raise your hand. Quite a few. So I guess your perspectives would have been very useful for them.
So I think I'll just add to that. I think,
Sure.
So while, it's very important to sort of focus on one thing and get it right, I actually also think that, like for example, if I talk about what our experience was, we were focused on solving problems for small businesses in cross-border trade, right? Now, opportunities emerged for us along the way. So financing was obviously the key problem we set off to solve. But now we've also launched a commerce platform because many of these SMBs are looking at partners overseas, right? So I think even in the case of Leap, ultimately when you're dealing with the same customer, if you can add more product lines to make their life easy, that I think would be, that I think works quite well.
Would you attribute these to the breakthroughs you experienced as you were trying to expand your footprint outside of India?
So to some extent, yes, but I think ultimately it just comes down to really understanding your customer and their pain points and what other areas you can actually also add value to your customer, and that I think has been the experience. So yeah.
Vivek, I want to come to you now. Now, Square Yards operates in a sector which is heavily regulated. Tell me a bit about how you've cracked the code in so many countries, where licensing norms are different. The regulations are different. How do you bring about an element of uniformity which is easy for a business at your level of scale to actually not just expand, but also to exploit?
Yeah, Neha. So if you look at real estate globally, right, it's one of the highly regulated sectors. Not in India. India is still, the regulations are coming out, but if you look at US, Canada, Australia, these markets, they are heavily regulated in terms of first you have to get a real estate license to operate out of there. You'll have to get, all your agents have to get certifications, right? And those certifications are actually renewed every year. Then how do you market properties? That is also highly regulated. You cannot just pick up the phone and call customers, right? How do you advertise? How do you hire? In some of the countries, you will have to have a local partner, which is a 50-50 ownership kind of structure. So we faced all these challenges. And then in some of the countries, if you actually step over these regulations, the fines are also on a high side. So we'll have, when we started these operations in different countries, we had multiple challenges. And it's not that we have not made mistakes, we have made mistakes, we have paid fines, but slowly we realized that instead of, in India, like you do something and you ask for forgiveness later, you don't ask for permissions, right? But in these countries, you can't do that. So we hired a chief compliance officers, we hired a good team of legal and compliance, of course based out of India, but they were coordinating in each of these countries. So we got all the licenses, all the employment contracts and everything. So it's a process that we learned over the years as we expanded, and I would say that it's still a learning. A lot of new things comes up, like how do you use of AI, right? So a lot of different rules are evolving as the technology also is evolving, and we'll have to keep up with these.
Again, I want to go back to the audience. How many founders here are actually grappling with regulatory challenges in terms of being present in different countries? Hands up, please. All right. Would you like to share what is the regulatory hurdle that you are facing? A mic is coming to you, sir. Just a minute. Please introduce yourself. In the payment space.
पाँच नंबर माइक म्यूट करना aligned with stablecoin payment rails, and that's where now things are becoming a little easy. But yes, challenge is there because you can't go get license from all the countries. So you have to do it in it's kind of sometimes it's legal, sometimes you can get stuck and all those. So it's challenge, but the digital currency payment space or stablecoin payment space is going to boom. It's around $3 trillion as per US government records now, after they made the law. And so countries are getting aligned. Even RBI in India has said, not RBI, Ministry of Finance, that they are going to allow exporters to get money. I mean, they are trying to test it. So a lot of challenging times, but good for.
I think the reason I wanted to go to the audience was because this is such a key factor when it comes to cross-border breakthroughs, understanding how to tackle the regulatory challenges. Thank you so much for sharing your perspective. At the end, we'll come back to the audience should we have time. But coming back to you again, and education is a space where in a country like India, for instance, each state has a very different flavor, right? And you spoke about 6 countries at one point where you wanted to grow and where you wanted to have a footprint. Tell me a bit about what surprised you when it came to factors that were different in all of these regions, and how do you then optimize? How do you decide on the element of uniformity, what you will stand for as a company?
So, specifically in study abroad, most of the students want to go to English-speaking Tier 1 countries, which is USA, UK, Ireland, Canada, Australia, New Zealand. So the entire world, like starting from east to west, everyone wants to actually study over there. And that was again like a positive point for us when we were thinking about scaling, because the market which we were catering to, or the product which we have, everyone has the same demand almost. But certain countries have like some preferences. Just like you said, even India, states, if you go to Punjab, Punjab student wants to go to Canada, while Andhra Pradesh, Tamil Nadu, they want to go to USA, right? Gujarat students want to go to UK. So a lot of Nepal students, they go to Japan actually. And like a lot of like other countries like Vietnam, they go to Singapore. So there is a pattern, but like in most of the countries have some local preferences other than these 6-7 giants. So that actually was a learning for us initially. Like we were thinking that we actually don't have to scale beyond these 6-7 countries. But with these learnings, we actually scaled it up to Europe, and now we help students getting admissions in Europe, even Japan, and we do some part of Africa as well.
Pushkar, coming to you, the area that you are involved in, how do you build an operating model, which can streamline all the underwriting work? Because it's so different in different parts of the world. How have you tackled that?
Sure. So I would say, of course, for our kind of business, risk management is the most critical aspects. And I think, fundamentally it comes down to really understanding the core risks which we have for any trade transaction which we are financing, right? And I think with that understanding, having built that understanding in India, or I guess the trade which we were financing from India to global, I think as we looked at markets like the US and Mexico, really thinking about, how do you still take that fundamental model, but then kind of apply it domestically? Now, of course, few things change, right? One is obviously the kind of digitization we've had in India. That obviously has been a big breakthrough in terms of really being able to tap into lots of sort of electronic data to be able to underwrite trade and, to be able to understand trade patterns. Now, that kind of data availability is not always there in every market. So then how do you sort of mitigate that? Secondly, I think just in terms of legal enforcement, so that I think again varies across markets, the strength of commercial contracts and your enforceability in case of a default. So that, of course, is another factor. So I think for us, it was really about first actually having a fundamental kind of model around what risks we are really looking to mitigate, and then kind of tweaking it for each market based on the data availability, based on the legal enforcement, based on regulatory challenges as well as to what you can and cannot do and what kind of licenses you need to have to operate in this market. So yeah, and I think that's where I think the learning has also been that, oftentimes, when we started, obviously, the focus was that we wanted to build a global platform. And we did expand not just US, Mexico, India, but we also actually had presence in the Middle East, in Canada. And I think we quickly realized that, while global expansion is obviously an important kind of mission for us, I think just going deeper in each of the markets also, has a lot of benefit. And we actually scaled down on some of these markets and decided to go deeper in the 3 markets we operate, and more so actually India and the US. So I think that has been our journey and how we've been able to kind of take our underwriting global.
Interesting. Vivek, there's something you mentioned in an earlier response. I'd like you to elaborate that. Local autonomy and central control. In an area like real estate, and especially considering that Square Yards is trying to grow in this space, not just in India, outside the country as well, tell me a bit about how do you balance the two? How do you have local autonomy and how do you have central control at the same time, given the backdrop where the regulatory environment is so different in each region?
Yeah, so talking about these specific points. So first I'll talk about central control and then local autonomy. So real estate is not a sector where people look for international careers. Like it was not, it's still not a sector. And if you look at tech or other sectors, so early on we realized that there is a huge cultural difference if we hire locally in these countries versus we promote people and give them international opportunities. So we send a lot of our top leaders to different countries. So someone became head of Canada, someone became head of Australia, head of Dubai, so on and so forth. So because these were homegrown leaders and they were culturally ingrained with our processes and our culture, so it was always easy to have that centralized control. But at the same time, these leaders were given full autonomy. So I don't know if many people know, but we are a large team of 20 co-founders at Square Yards. And each one of us manages a geography or a vertical. Okay, so we actually made them co-founders. So our head of Canada is co-founder of Square Yards Group, similarly head of Australia, Dubai, in different countries. So when you give that kind of autonomy that these guys are managing their own cost, own P&L, right? But they are also culturally aligned to you. That's how we were able to achieve this. And we are a very cohesive unit. None of the co-founders have left in last 6-7 years. And in the top leadership also, our attrition rates are one of the lowest.
All 3 of you spoke about your journey and your breakthrough moment, to put it in a very brief way. Tell me a bit about how exactly do you build a brand or build systems where you can say that you are a cultural fit, something that caters to local preferences, local tastes, local regulatory environment. How do you crack the code of being culturally adaptable across regions?
A few years back, we were like clueless about this, that we are going to launch in 4 different continents, 6 different countries. So initially we thought that we will actually go spend time with the founder, with the leaders over there. We will understand them. But then it always happened that whenever you launch globally, it's just like a piece of your business, which is not very large. And then we could clearly say that we cannot do this, obviously, because this is just an experiment for us. right now, and we are launching so many countries. It's almost impossible that we go spend a lot of time with them, and then like merge the cultures easily. I think what worked for us is that we actually hired folks who were already in this domain and have been working with one of our investors group. That actually worked very well for us because we knew from beginning that they are actually a culture fit for us. And we invested a lot. Generally, we actually call out like this culture word in our office almost 6 times a day, because we said just by writing like a culture doc or understanding it doesn't like make a company's culture, obviously. You have to keep iterating it, keep saying it every single day that this is what it is. So this is about like the work culture. Now, like we'll talk about the individual country cultures. So let's say culture of Vietnam is entirely different from Colombia. Right? We were like actually clueless when we started working with Colombia. Like first few months were like really hard for us understanding, because we work very differently. We are like very hungry for success, very ambitious. I couldn't see that in the initial few days in Colombia. So, but we knew that we have to accept it first. So the first phase was done when we actually accepted it. That this is what it is, because we cannot just find magically one guy in every single country where like the culture will exactly match. So my experience and my recommendation is basically that you understand the culture first. It takes some time. It doesn't happen in a day. So you understand it, accept it, and then you find a way to work with them.
So it takes time, but eventually you find a way to address the cultural issues. Tell me a bit about what your experience has been, and because it is a very important piece of the pie, how did you tackle the cultural differences and ensure that you were a good culture fit where you were operating?
Sure. So I think one of the things which, if you look at most of the leadership team which we have, I think most of them have had some sort of an international mindset / experience / they've spent some time overseas, right? And at least what we've seen is that at the leadership level, having that, being able to kind of, be able to interact with people from various nationalities and be able to still cohesively work as a team. The educational background and the work experience actually matters a lot. And that is, I think, something we've ensured, right? So a lot of times when we obviously bring on people at the leadership level, that is something we absolutely look for. But at the same point, as you're kind of operating in each of those markets, you do need people who understand those local nuances, right? So just to give you an example, like, let's say in Mexico, we had, it's scaled down now, but we actually at some point had almost like a 50-60 member team operating locally there. So most of the sales people, business development people were obviously local. They could understand, talk to the market and be able to sell our product. However, the head of Mexico for us was somebody who had spent some time in the US, in Mexico, went to a top business school in the US, something which, some of the other folks in India also had. So they could actually sort of relate to each other and operate in a way that at the leadership level, we were trying to maintain a certain culture, but locally we were customizing based on the market we were in and what was required for that market. So I think that, really helped. Just having people with that international background and mindset in the leadership team, at least. Yeah.
Vivek, what are some cultural nuances that you had to cope with and address and also adapt?
Yeah, so see, I explained in the previous question as well that if we took a different route, we sent people from India and made them leaders, and this was a talent acquisition strategy as well, because a lot of people don't get a chance in the real estate space to go abroad. So but when we hired, so these people actually hired locally, and they were able to align these into our culture, the local employees into our culture. So there are still challenges. I won't say that we have reached where we want to be, but anyone who is brought up in different conditions, and then it's always a challenge to culturally align those guys. What we do is 2 to 3 times a year we call everyone to a single place, right? And we have these offsites for going up to 4, 5, 6 days. And there are multiple of these events where everyone from all across the world assembles to a single place, and then we play together. We have cultural events, we have sports events, right? And that's how we are able to bond with everyone locally in those geographies. And then everyone looks forwards to these events, and there is a great sense of competition which happens over there. So these are some of the things that we have done to culturally align. But as I said earlier, that there are differences, the thought process, the upbringings, and so you'll have to manage that. At some point of time, you will run out of people whom you can send on visas. So you'll have to hire locally, and we are quite cognizant of that.
So we also spoke about uncertainties in the global economy. We spoke about rapid disruption. So tell me a bit about how do you not mitigate, how do you mitigate risk by not being overly dependent on one geography? Starting with you.
Okay. So I think we are already diversified in almost all the sectors. We start with test prep. We help students with their exam preparations for JRE, GMAT, IELTS, SATs, all kind of exams. We are now getting into language trainings as well. So like we are starting with German classes, so diversifying even more. And then then study abroad, we do various countries, all continents almost. So I've seen like sun drops, obviously, because of all the situations which are going on in certain countries, but then the other countries actually evolved really well. So for us, Germany is actually like doing really well right now. Japan is doing really well. In terms of diversification, I think amongst all our peers generally, whenever we talk to the board and the others, we feel that we are actually diversified globally in like different continents and horizontally as well. Basically, we are catering a need from day zero of someone just thinking about studying abroad or building a career outside, basically India, and until they actually build it.
Would you like to expand on that in your area of experience?
Sure. So I think, as you rightly pointed out, with basically what's been happening in the last 2-3 years, diversification has become quite important. And I think in general, even if you go back, so we started about 7-8 years back, because we are in a space which is largely to do with global trade, and we are super impacted actually by so many things which keep happening. You know, there may be a new trade policy which comes in, new tariffs get introduced, duties get introduced, right? Some sector may actually get impacted more than something else. There are tailwinds, there are headwinds, right? So I think for us, diversification was kind of just very critical right from the get-go. Like, okay, how do you, so when we started, it was largely funding trade between India and the US. Then we said that, okay, let's now start looking at India with, other countries, and we now work with counterparties in about 100 odd countries, right? Then the idea was that, okay, we are so dependent on India exports, right? But, a tariff gets introduced and suddenly, your volumes get dropped by 20%. So how do you sort of expand beyond India? And then not just that, also expand across industries, because each industry has its own cycle and may have its own nuances. So I think, so focus is important, but yes, for us, we only become stronger as we become more diversified. And that has been a very inherent part of our strategy as to how do you sort of build a highly diverse business, kind of base of customers across geographies, across industries. Yeah.
So would you say there's a geography where you are heavily dependent on in the current background?
So I would say India, because of the fact that we started here, it still contributes to about 50-60% of our business, right? And yes, so we do get impacted when anything on the export side from India gets impacted. But I think we've come a long way, and I think, of course, as we think about the next 5 years, that will be an ongoing part of our strategy as to how do we diversify.
Is India also your dominant geography when it comes to revenue contribution?
Yes, so India contributes to almost 85%, but for us, the real estate cycles have worked in our favor. So real estates are typically long cycles. So fortunately, when one geography is growing, the others, or when one is not growing, the others are growing. So it has not happened since the crisis in 2008-9 that all the geographies are going down simultaneously, except for a brief COVID period. So India is one of the fastest growing economies, and it is growing well. So we have been always focused on India as a base, but Canada, Australia, Middle East, so these are cyclical. Dubai is still, for the last 3-4 years, it's growing well, but Canada has slowed down considerably since last couple of years. But when Canada goes up, so it balances for us, and we are always looking for more geographies where we can expand.
So India, which is the fastest growing major economy, I think it's a good problem to have. If you have majority contribution coming from India, at least you are mitigated from some of the global risks. Would it be right to say so? Is it a correct conclusion?
Yes, you have to be in India. I mean, if you look at the forecast and where it's going to become 10 trillion economy in next 5-6 years, right? And then the forecast for 2047. So this is the place to be in, but you'll have to build global companies from here, right? So the availability of talent, the infrastructure, everything is improving. So I believe that there'll be multi-billion-dollar or trillion-dollar companies which will emerge out of India in next 10-15 years, and this is our opportunity. If we miss this chance, someone else will take it. So this is on us as the founders or entrepreneurs group to really build on.
Do you wish to add to that, Pushkar?
Yeah, so I would say that absolutely. I think if we take like a longer horizon, for sure, India is one of the fastest growing economies, and you see like things happening. Everybody is looking at that growth, and so having a strong presence in India is absolutely important. And I think I'll add 2 more points. One is that, but having a global base and diversification across geographies, at least for our business, also helps, because you are then able to mitigate short-term shocks, right? Because like as he was pointing out, when certain things are cyclical, even if, let's say India market is kind of, slowing down, you have potentially another market which is going up. So having that definitely helps. And I would say that the third thing I would say is that, capitalizing on the benefits of being in India to build a global company is where I feel like the real opportunity is, right? So for example, even in the US, we worked with a lot of US small businesses, but I would say 90% of our sales effort is also run from India through an inside sales operation. And we are able to compete far more effectively with domestic players there, because our cost base is significantly more optimized, and that's why we can offer a more cheaper and a more kind of cost-effective solution. So the idea is that if you are able to tap into the local talent and the local advantages we have, but yet be able to build a global company, that I think is also a big opportunity as we sort of think about the next few years.
Any final remarks, Rajan?
I totally agree with both of them, and just want to add this, that we know that in economy is actually going, and every other day we just hear in the news or papers that while other few economies are struggling to keep the rate of growth. India is doing really well. Other leverage which we have here is that we have a lot of smart folks who have capability of delivering a lot, building a lot of things. Whenever I just meet people in Bangalore specifically, I see a lot of skill, a lot of talent which is available, and with the kind of potential and the leverage of finance we have over here, and with the right set of people, I think we can actually build a lot of global companies. That's all, I think, yeah.
All right, on that note, we'll wrap this conversation. Thank you so much, gentlemen, for your time. It was great speaking with all of you.
Thank you.
Thank you so much, Neha and our esteemed panelists, for their insightful discussion. Moving on, ladies and gentlemen, our next session on the theme of investing beyond borders, how global capital backs entrepreneurs. The session aims to explain what global VCs look for when backing Indian founders aiming for international markets, and setting the tone for evaluating global readiness, cross-border business models, and emerging corridors of capital. Please welcome our moderator, Ridhima Bhatnagar, to take this conversation forward. Ridhima, welcome on stage. Big round of applause for Ridhima, please. And joining her on stage, please welcome our first panelist, Luca Barbie, General Partner, Saudi Technology Ventures, Saudi Arabia. Welcome, Luca. Big round of applause for Luca. Please welcome our second panelist, Deep Singhania, Venture Partner, Karma Free Capital, Singapore. Deep, welcome on stage. And last but not the least, please welcome on stage Swati Chaturvedi, co-founder and CEO, Propelx, General Partner, Calculus VC. Swati. Welcome all the panelists. Ridhima, over to you.
Thank you for that, Ashima. Firstly, welcome to DGEMS 2025. So thank you so much for taking our time and joining us. I'm very, very sure that this is going to be very fascinating and riveting. Before we really talk about investing beyond borders, and we're going to try and cover various geographies, I just want to go around the panel, maybe take about 20 seconds to introduce yourselves so that the audience also has a better idea of where we're getting into. Do you want to start with that, please?
Yes. So hi, everyone. Thank you for having me. My name is Swati Chaturvedi. I'm a partner at Calculus VC. We invest in deep tech startups, Series A's and B's. 3 big areas, future of computing and AI. The second is computational life sciences and health tech. And the third is advanced industrial technologies. We don't lead rounds, but I'm here to explore the Indian startup ecosystem, specifically deep tech startups. I've been seeing a lot of very interesting companies coming out, so I'm here to talk more to you all. Nice to be here.
Lovely. Please go ahead.
Hi, good afternoon. Thank you for having me here as well. This is Deep Singhania from KFC Ventures in Singapore. KFC is Karma Free Capital. We are active across the sectors, specifically in seed to Series B kind of stages. But that's not the limit because we are a corporate venture fund. We are not under any pressure of any specific sector or timelines, etc. We look forward to enterprise. B2B is something which excites us really well. Other than that, any other enterprise platform also is interesting if we can take it across geographies. So we have reach in around 50 plus countries where we take the founders. So very happy to be here. Very exciting crowd. I've heard 400 plus founders are here. Looking forward to some very interesting dialogues. Thank you.
Sure, Luca, please go ahead.
Yes, Luca Barbi from STV. STV is the largest independent venture capital fund focused on the Middle East. We have an office in Saudi Arabia and one in UAE. We have a portfolio of 45 companies, around 45 companies at the moment, and we invest across different stages and different sectors.
Lovely. So I want to once again go around the panel to just try and set some context. And Luca, why don't I begin with you this time around? We're of course talking about certain parameters, certain checklists that will help startups and founders in terms of when they're looking to widen their horizons as well, right? So help me first understand that when you look at a startup, are there certain checklists that make them stand out in terms of what makes them a good candidate as far as a global investment is concerned? Why don't we start from there? And I'll request all of you to chip in for the same, just to try and understand if the parameters differ even between the panelists. So Luca, why don't you start with that?
Yes, so especially in the context of a startup that scale behind their own country, what we look at is for sure the traction. They need to achieve something before going in other countries. And then the second thing is like, why are you coming to our own region rather than other regions? So it's important to have a genuine, clear, and strong motivation that could be linked to the type of value proposition you have, the customers you can have in our region, or the identity of some of the team members. But that needs to be extremely clear. And eventually, it needs to be tangible. So how to make it tangible? Again, there are different ways. For sure, have initial customers, at least a few, in the region where you want to invest more, or having a regional presence with few team members or opening an office. These are important signs that it's not just an opportunistic exploration to raise capital from investors that are in that region, but is a strategic commitment because there is a strong belief that there is potential for your product, for your venture in a specific geography.
Sure. Deep?
To add from my side, when any founder or any organization that approaches us who is looking out to go beyond borders or trying to globalize, we look at a long list of factors, if you ask me. The top ones are, one and very specific is, what is the need? Why are you trying to go out? Do you seek validation from the external market? Or do you think your market is small enough for you? It is not able to fulfill your appetite. Now, it also depends on your, as we say, it is cost metrics. When you are trying to deliver a service or a specific platform, a specific problem statement that you're solving, what is your cost of economics there? Is it going to work in the target market? Because many of the time, cost of acquisition becomes higher than the lifetime value of the customer. What is the exact reason that you're trying to go? So we do very deep validation on the specific aspect of LTV. What is it that you're running after? And then what is your cost of acquisition and cost of retaining that customer? What are you trying to spend? Further than that, once the cost of economics is done, we definitely ask them, what is the cultural fit that you are trying to look at? You're not meant for each and every market. There are language barriers, there are cultural barriers, and then there are service expectation barriers as well. There are different markets which are ready to accept mistakes. There are some markets which are completely unforgivable. Once you make a mistake there, then you are absolutely killed in that market. So what is it that you are trying to do? Is it, as I started with, trying to increase your reach just to seek more validation or more revenue? Last and not the least, the stage comes to us where we see, are you ready to bite what you can chew? Or you are chewing more than what you can, or you are rather biting more than what you can chew. This is something which, because we have seen organizations dying because of just getting more business. 30 years ago, when we started our career, we actually heard this saying that organizations die not because of the lack of business. Many times they die because of they have more business to deliver and they're not able to. So these are the most important factors that we try to look for.
Very fascinating in terms of what your intent to go beyond border really is. And I'll come back to you in just a bit. But Swati, what about you? Do you agree with and concur with what the gentlemen are saying?
Yeah, but our perspective is a little different because, so I'm based in the San Francisco Bay Area. So companies that are coming there because the US is the largest market for most things, especially in deep tech. So I think we understand why you're coming there, but the company has to be ready. In terms of, I don't think we'll be taking technology risk very specifically, which means your product should be ready, you should have prototypes, you should have customers. So some level of traction has to be there. And there has to be at least some engagement with customers in the US, right? Which is the reason why you want to come there. So that is on the technology and business side of things. But there also has to be this recognition that the regulatory regime is very different. Yeah. And if you're looking for investors from the US, then you do need to have an entity in the US for many reasons. Very specifically, you should be ready to flip your structure, right? So you should be ready to incorporate in Delaware, and your India entity becomes an operational subsidiary. So those are some of the things that people have to be ready for. And finally, you know, if you're coming to the US, then the understanding is that you have some resources to back you up. And so, sure, you know, you're looking for resources, you're looking for investment, additional investment, but you should have an entity, a properly, fully running entity. For example, just companies looking for seed financing would not be appropriate to approach US investors, certainly not Calculus. Yeah.
Fascinating. But you know, what is fascinating about this panel is that we're going to try and understand three very, very different geographies and markets, from Saudi Arabia to Singapore to United States. So, Luca, why don't I start with you, and we begin with understanding what's happening with Saudi at this point of time when we're speaking. There is a lot of evolution happening as far as the digital space is concerned, right? There's a lot of development happening in cloud. There's a lot of development happening in AI. And we're seeing Saudi make that as a national priority as well. At this time, when there is such fast-paced global evolution happening as far as technology is happening, what do you see as the priority for startups who are entering at this point as well?
First of all, I want to confirm the level of excitement that we are having for technology building in Saudi Arabia and the rest of GCC. When we started investing 8 years ago, the total investment in the region was less than $500 million. Today, we are at $5 billion. We didn't have any success case 7 years ago. Now we have 14 unicorns, and we have 6 companies preparing for IPO. So there is a lot of momentum driven also by what has been achieved in the last 7 years, that was more or less producing a replica of business model that were successful elsewhere in the given sector, like fintech, e-commerce, ride-hailing, and the others, right? Now I think there is a new chapter in Saudi Arabia and in the rest of GCC that is more real, authentic innovation. And of course, AI is the segment growing faster. In Saudi Arabia, there are important initiatives from the government to build the infrastructure layer. So we are talking about data center, LLM, and also pushing government control companies to adopt AI. So this is creating a very favorable ecosystem environment for entrepreneurs that have startup at the application layer to find infrastructure and customers. Okay, and the same agenda is also true not just for Saudi Arabia, but also for UAE, that is another country building strong capabilities. So, and in this new chapter, what we are seeing differently from the previous one is having a more global company at early stage. Okay? So what we had before with the traditional tech, I will call it, is a company from the region for the region. And this is where, you know, being hyper-localized, regulation, knowing people, being present in the market was necessary. We don't have any success case of company based outside of the GCC that have been successful in GCC. But today, it's different. We have a new fund focusing on AI, and the first 2 investment, one of the 2 company is 1/3 in the Middle East, 1/3 in Europe, and 1/3 in US. So this is moving also the mentality of investors like us that before were suspicious seeing an early stage company in multiple markets. Now it's becoming more normal So also from the investment side, there is a less skepticism to seeing company coming from other market to our market.
That's interesting to hear, and that's also good to hear that there is reduced skepticism. But Deep, I want to come to you. And as I said, we have very fascinating representation in terms of geographies. We're talking about Saudi with Luca in terms of the vast tech revolution that's taking place. The other aspect that we usually want to focus on when we talk about investing beyond borders or expanding your foothold is that can you use one market as a base and then use that to get into other markets and other bases as well, right? Let's use Singapore as an example for that. Is there a certain playbook that you're seeing by those who are wanting to use Singapore as their base to try and enter the allied markets, whether it could be a Malaysia, Vietnam, and the region? Are you seeing certain parameters or playlists being used by those who are trying to use Singapore as their base?
Very interesting, because this is very relevant for most of the founders present here to know. Singapore has always positioned, being a very, very small geography. As you know, it's only 700 square kilometers city country and population of only 6 million people. So as a captive market, Singapore is not itself, by itself, it's not a very huge market. So Singapore has realized this very, very early in their life cycle. The country is only 65-year-old. So they realized it very, very early, and how they position themselves is they have strengthened the core infrastructure for any business to run in Singapore. So they have, in fact, focused on that and positioned themselves by very common incentives that anyone gives. The most common incentive is tax incentive, which they have positioned themselves as an RHQ location, regional headquarter. So that's what you will see most of the companies. In fact, they have done reverse flip also. You have seen companies coming from India to Singapore to shift their headquarters there. And now, obviously, looking at the growth of India and the speed at the highest GDP at which India is delivering, companies are going back from Singapore to India. But why is it becoming possible is also because of the very favorable tax structure that Singapore has created, as well as non-ambiguous law framework. So when you look at that, the double taxation agreement with India also comes into the play, which is very, very favorable for Indian businesses, Indian founders, Indian individuals and companies. So along with that, they have also strengthened their legal framework, the IP protection laws, which positions themselves very, very strongly in the region. Their legal framework in terms of dispute resolution, as well as when you look at arbitration and common law practices, it is favorable to business and it is very fast. Again, unambiguous and very fast. So you don't get stuck in the disputes for months or even years. So it resolves very, very fast. So they have focused on these areas. That is the first thing. They have built their bridges with all the regional economic players very strongly. So may it be Indonesia, may it be Malaysia, may it be Vietnam, may it be Philippines. These are some of the largest market which are controlled from Singapore predominantly. Why? Because the country-specific skills for all these countries are very easily available in Singapore. So if you want to build a small team by keeping your most of the cost structure in India, it is highly doable and possible to do it in Singapore, and Singapore promotes that. Along with that, they have also built the infrastructure to run the businesses, may it be data centers. So at a time, they were the largest data center player in this part of the world. And the connectivity in terms of the bandwidth and this. So they have focused that. They have also ensured that they invite all the large GCPs. So may it be Amazon, may it be Google, may it be Microsoft, to establish their largest of the data center there. Because most of the countries today are going for their own sovereignty. So they want data to be hosted their own country. They also want all the platforms that you are building to confer to the specific data protection laws. So this is another area which we look at very, very closely when we are investing or looking at any partnering with any company, that how they are conforming to the data standards. Otherwise, you'll get to know that they are talking about a specific geography, but they're not conforming to the data standards. Yeah. India is becoming very strict in PDP, so that is something which is to look for. So these are a few areas where Singapore positions themselves very, very strongly, and they had been largely successful.
Interesting. Also very interesting to what you said that it's happening both ways now, not just India, Singapore, but Singapore, India as well. And I'll come back to that in just a bit. But Swati, just to highlight and try and understand what's happening as far as United States is concerned, right? Of course, the number there of founders trying to enter is big. But I want to try and understand the other way around this time around with you, which is that when founders are trying to enter the US market, are there some of the misconceptions that they enter with, whether this could be about fundraising, this could be about customer experience, because those are some of the parameters that every founder is working with. But would you want to bust some of the misconceptions or myths that they enter with and then they find themselves grappling with a lot to cover?
You know, I will be honest, in deep tech, at least the founders that I've seen, they are pretty well set. I've been very impressed. I have been impressed, that's why I'm here. Because the number one thing is they have unique technology. And that is super important. And if you're in deep tech, you're trying to enter the US market, you are competing with the other companies. And there's a lot of R&D that goes on in the US. It's government funded. So the number one thing is you have to have unique technology. And these people, typically, a deep tech company that's looking to enter the US market, I'll just give you a profile. They would have received some small grants. They would have received friends and family money. They would have a prototype. They would have been working for 5-6 years. Yeah. When you've been doing that, you kind of learn how to be an entrepreneur, right? And then you're trying to enter the US. So at least the founders that I have seen, I think they are well set. They are very frugal. Yeah. I loved that there was someone who was building his own furniture from IKEA. I could see it in the background. So I have been impressed. I wouldn't say there are, I think people are well aware, and typically their customers are corporates, right? So they are working very closely with them on joint development projects. So it is not a consumer thing where you can launch an app and then consumer experience becomes an issue and user experience becomes an issue and you're trying to service it and there's a cultural difference. It is not that. It is a little bit different in that you're working quite closely with the corporate and you're trying to get the best out of your product. And typically your technology is advanced enough that the US or European or whoever, corporate thought that it was worthwhile partnering with you. So I would say that, at least in deep tech, the founders that I've seen, they are quite sorted. I've been super impressed. Yeah, that's why I'm here.
That sounds like a very optimistic picture. I think that will make a lot of people in the audience very happy as well. That's lovely to hear, Swati. But Luca, let me come back to you. We touched upon this when we opened the panel discussion, that there are various parameters that you look at to try and guess or try and come to a conclusion that a startup would either do great in this region or they won't, right? And I go back to what's happening as far as the AI revolution, the digital revolution that's happening in Saudi, right? But it's not just one concern, of course, for founders is the investment, but the other, of course, is to try and ally everything with the local requirements as well, whether it's your teams, whether it's your structures, whether it's trying to understand the local ground reality as well. So in terms of all of this, in terms of whether it's teams, whether it's structures, how do you assess that a startup, yes, they can go forward in this region vis-a-vis a startup that cannot?
Middle East and all the region, they do their best to attract business, to attract FDI. So there is always a way to get established, to get the regulatory approval and whatever is needed to run business. But I think you are competing against the local entrepreneurs, right? That are doing business in their backyard with people they know, with clients they know, with regulator they know. So these are your competitors, are companies that are Saudi native, UAE native, GCC natives. So you need to get up to speed when it comes to knowing the market inside out across all the aspects, from the regulation, customer needs, investors, competitors. So I think you need to spend time in the market to have this learning and also to build your own network. Also, when approaching the investors, you don't need to be 100% ready. Yeah. you can be 10% ready. Look, this is my first trip to Riyadh. I think it's very interesting. This is what I'm doing. I want to know you, if you have any feedback, any learning. Then you come back after 3 months with some learning conclusion, maybe, oh, I'm talking to this client, or I'm talking to 3 candidates that could become general manager for Saudi. And then you also need to build your conviction first, right? And start building your presence, and then you can get funding. And getting funding, it's not the measure objective per se, I guess, because if you are a good company, you can get funding from multi-dollar investors. But it's a great tool to enter a new market, because if you have the right founder, the right investors behind you, first of all, you get a stamp, and you are not anymore just a foreign company, but there are money from the region and regional investors that are backing your company. So you kind of blend your DNA in terms of perception of customers and clients, especially if you operate in the B2B, but also in the B2C. And secondly, that backer, if it's the right one, will help you to find shortcuts, to connect with the regulator, and to hire people, because of course it's aligned with your interest being an investor in your cap table.
You know, Luca, you said something very interesting, and I think that will have a lot of resonance with people in the audience as well, where you said that you don't need to be 100% ready, and I think that's a misconception that a lot of people have, that I don't have a 100% plan, am I still ready to find myself at least in the shortlist or not? So I just want to ask you from the reverse perspective then. You're saying that you don't need to be 100% ready. Say you're 10% or 20% ready. But at this point, if you're still scouting the market, what are some of the tips that you would tell them to go from 10% ready to say an 80% ready?
Yeah, it's important how you frame the stage you are, right? If you go and say, oh, I'm raising money to expand in Saudi Arabia, and you are 10% ready, you will fail. If you say, I'm not here to raise money, I'm here to explore the market, I learn you are investors with insight, I want to do my due diligence, I'm in the scouting, people will open up. So you need to have them talking more than you. And this is where you build the relationship, right? And then you go back and you show progress. That could be one way to, to run fundraising successfully. Yeah, and if you are 100% ready, then you save time, and then you get a yes or no, right?
I think Deep wanted to come in, sure.
So I want to say something which I'm sure most of the founders here will like. So the way we look at things is a little bit different. How we look at all the founders are building their own platforms. I don't think any of the founder will have time here to go and explore a new market, spend time there. And this is what we believe, that he can spend a couple of months or try to understand the culture or the people there. How many markets can he do that? So I don't think they will have any time. What we believe is, we look at, is your platform, we being a global investor, we come and see, is your platform first of all ready for different market? That perspective has to be brought by us. We also understand that what are the areas in which we can then guide you or support you, or at the same time can accelerate your growth. You are focused on your own challenges in your own home market. How can I expect that you will know Singapore? No. Unless and until you obviously appoint a very expensive advisor who will advise you on that market. And I don't think any founder here will say, unless and until I have raised money, where will I hire an advisor from? Right? So that becomes a chicken and egg problem. So if I say I am not going to invest till the time you are ready, then he will never be ready. He will raise it. Unless he gets money, he is not able to spend time on the markets or to understand market. Now, that is what we bring in. As I was briefing earlier, we try to see if your solution is ready, the cost of economic works in your favor, you have an appetite to grow your business beyond your boundary, and you can take more orders and deliver them on time with the desired quality on which you have grown till now. Can you supersede that quality? Can you get more customer references? Then it's the global investors who bring in that knowledge. Now, obviously, they also bring the regulatory connects, the local taxation laws, kind of laws or whatsoever, in whichever market they will be aspiring to grow. That is what is brought by us. So we focus on that specific vacuum, which they already are struggling with. to fill that and then do it. Obviously, we do not want to spend time or rather we do not want them to spend the time to understand and learn new markets. So I liked in the earlier panel, there was Square Yards, which said 20 countries I have appointed 20 local CEOs. Now obviously he has raised, if you see, he has raised what, 100 million plus already. He has money to do that, and he did that because he knew his platform is ready to go in that market. So he can get money, he can hire a local team, he can spend time to blend them into their own culture and then do it. Vis-a-vis, you heard Leap, which said they struggle. They straight away went into 6 market and then they struggled. So the case studies are there in front of you, which has spoken. Now we have also experienced the same. That's why we focus very, very specifically. We want founders to spend time on their own technology, building up their own platform, focus on your own backyard, and leave the global to the rest.
Interesting. Deep, you've spoken about both perspectives as far as fundraising is concerned. And you said, if there is money, then of course you will go to maybe 6 to 20 markets. If not, then we've seen the other perspective. So why don't I come back to Singapore again to try and understand in a more localized manner, maybe some of the mistakes that you think that founders are making when they're fundraising in Singapore specifically? Because as we said earlier, why I'm asking you this specifically is because this also then allies with their larger plan if they want to use Singapore as a base to then expand into other markets as well. So some of the mistakes that you're seeing that are being made by founders while they're trying to fundraise?
So interesting. So this will also help everyone. So what we have seen, I will only share our experiences of last 5 years. We have seen founders failing after raising money or before raising money as well. Now, after raising money, obviously, they are pumped up. They are super pumped up. They have raised money. They are on top of the moon. And many of the time, they lose fiscal control. And they go on a hiring spree. So I won't say they are putting the cart in front of the horse, but at least the cart becomes parallel to the horse. Now, that should not happen. So we have seen founders failing after raising the money by hiring too fast. Singapore is a very expensive market. $1 is 68 rupees. So one has to be very, very cognizant about that. At the same time, just by thinking Singapore, which has super connectivity with the region, and travel is like I'm traveling from Delhi to Gurgaon, I should not be traveling every day and burning dollars. So people have tried to go into each and every market in ASEAN. Just by opening office in Singapore, I'll go to Indonesia as well, I'll capture Malaysia as well, I'll do Philippines. Every country has unique cultural sentiments. It's very, very difficult to put them into the same light and do the business everywhere. They have failed by not doing hyper-localization. Now, you have used that word, hyper-localization. It is so important, whether you go to Middle East or whether you go to Southeast Asia. Hyper-localization is very, very important in terms of not only the functionality or regulators, which you are anyway do if you're touching regulators, but also in terms of cultural alignment. So that is something which has made founders fail miserably. Second aspect, which I, again, being an Indian born and brought up in Mumbai, please don't take it to heart, all the founders. India has this, still coming out of this chalta hai attitude, you know, jugaad or chalta hai attitude, which is a very common attitude here, and with all of us, including me. So that's something which doesn't work in many markets. Singapore hates it. So black is black, white is white. There is nothing called gray there. So if it doesn't work, it doesn't work. And then you cannot give any excuses. And it's ruthless. There is no mercy. So I have seen founders failing despite having good solutions just because of the chalta hai attitude. You know, okay, I'll do it. Or overcommitment, under-deliver. Now, this is something which is very, very important to remember. You rather under-commit and over-deliver. So this is something I will seriously suggest to all the founders.
why this is very interesting is because all of this becomes a bit of a very personalized experiences woven into experiences that you've seen over the years, right? As you're rightly pointing out that it's the right attitude, the right mindset, and as you're saying, if you overcommit and underdeliver, then that's going to be a deal breaker for sure. Swati, I want to move to you now and understand from you. We've tried to understand what the next chapter in Saudi will look like, in Singapore will look like. I want to understand what will attract the next set of US institutional capital. We're talking at a time again when there is tech, deep tech, all of this moving at a very fast pace. So what are some of these sectors that are going to attract this next tranche that's going to come in, say, the next few years?
I told you, the sectors I'm investing in. Yes, that's why I'm doing it. Future of computing and AI, computational life sciences, advanced industrial technologies. Do it. I'm here because I feel like you guys have an advantage. You guys have a cost advantage. There's an arbitrage opportunity. So I'd love to meet you. But these are the areas where the government has historically invested heavily. I mean, in India, we are now starting, which is great. But in the US, the SBIR program, every government department has a mandate from the legislature. That 2.5%, that percentage changes every year. Some percentage, some small percentage of your budget, you got to spend on R&D, investing in these startups. So historically, the government has been spending, and they have developed a tremendous R&D capability. But today, I will say, I mean, to be very specific, what would we be looking for? Anything in AI, so better computing capabilities, alternatives to GPU, alternative to CUDA, better cooling solutions. I mean, I'm just getting very specific, but if you want the 3 big sectors, those are the 3 big sectors. Look at my website.
Okay, lovely. We will definitely look at your website. But because we are running short of time, I'm going to try and ask something similar that I asked Swati to Luca and Deep as well. We've understood what the issues are, what the lags are. Quickly understanding, if we look in the horizon in the futuristic years of, say, next 3 to 5 years, we're talking at a time, emerging tech is a big discussion point. What is that emerging tech, do you think, that will evolve, say, in the next 3 to 5 years, and that you also think will create some big opportunities as far as the next set of founders are concerned? Luca, first with you, please.
Yeah, first of all, I want to repeat something I mentioned before. I think we will see more global company as early stage. I think in the last 15 years, 20 years, America was first and all the others copy and adapting. I think now the playground is leveled up, and in each technology hub, we can actually develop genuine innovation that can go everywhere. Coming to the technology, we are not exposed to deep tech much, actually, not at all. We have a great conviction in application AI, and this is where we have a very strong pipeline that is mainly from our region. But as I mentioned before, we did 2 investments. The fund was launched a few months ago. We already did a couple of investments. One of these companies not only is multi-continent, Europe, US, and Middle East, but it counts among its clients Booking.com from Europe and OpenAI from US. And 50% of the founding team is from the Middle East. This is unheard before, right? So this is say, okay, before most of the country were doing not innovation risk, but execution risk. I have my Flipkart, I have my, I don't know now the landscape in India, but more or less the business model was given, you just need to do for your people, right? Now I think any new company has a degree of innovation that is higher, and because it's an innovative company, it can have the ambitions to go global faster.
Okay, lovely. Deep, I'll just reframe the question that I took to Luca to just try and understand a different perspective also from you, which is when we talk about the next generation of cross-border companies, one of the big factors that we speak about, of course, is global capital that you spoke about as well. How do you see global capital, in fact, shaping the next gen of these cross-border companies?
Global capital is bringing a lot of expectation as well as a lot of support, if you look at. Global capital obviously is today flowing more towards quantum computing, deep tech, and you see a tremendous use of agentic AI. which is along with hyper-localized version. Now, these three areas also require a deep setup of infrastructure, which is again localized, because more and more sovereignty is coming into these infrastructure, backed by very high level of cyber security. So if you look at these 5 are the areas now added with whatever Swati was saying or Luca was saying, these are the areas which are attracting a lot of global capital. Now, global capital along with this is bringing tremendous understanding of regulatory frameworks for the market. They are also not only bringing the understanding, they are also bringing the ecosystem, which will help you. Now, this ecosystem is also in form of, say, public-private partnership. They are able to bring the specific country-backed schemes, which are cooperating with the private players to form, say, a fund where a dollar-to-dollar matching is happening, and that fund can flow in terms of investing in the companies. It is also bringing a lot of legal knowledge about this, as well as then the expectation also grows. Global capital is also bringing a lot of expectation in terms of M&A, where they are not only bringing the players who can become either the acquirer or acquiree for these companies. So these are some of the areas which global capital is able to support a lot of founders.
Sure. Swati, I'll give you the final word, 30 seconds as we wrap some pearls of wisdom as we conclude this conversation.
Yeah, I mean, global capital really expects you to be ready, to be kick-ass, you know? You got to compete. You got to compete. There are lots of expectations. And I think number one, your technology should be ready. Number two, you should have a customer. You should be ready to flip. You should be ready to negotiate. And you really should have a deep belief in yourself.
I think that's where most of the inspiration comes from. But this has been such a pleasure. Thank you so much, Luca, Deep, as well as Swati. A huge round of applause, please, for our lovely panelists, not just for those pearls of wisdom, but I think being extremely candid with their own personal experience, that always shapes up our understanding as well. It's been such a pleasure. Thank you so much.
Thank you.
Please meet us.
calculusvc.com. And meet me. I am on LinkedIn.
And trade officials from key global markets exploring how policy, bilateral relationships, trade incentives, and regulatory frameworks are shaping new corridors for cross-border business. Our next panel is on the theme, Government Perspectives on the Changing Geo-Economic Scenario, Market Access and Expansion Corridors. Please join me in welcoming back on stage Ridhima Bhatnagar to moderate this session. Ridhima, pleasure having you here back on stage. And now it's time to invite our esteemed panelists. Please put your hands together for the first panelist, Ada Dindo, Director, India Desk, Indo-Polish Chamber of Commerce and Industry. Ada. Hi, Ada. Big round of applause for Ada, please. Now, please welcome our second panelist, Hans Hortenagel, Austria's Trade Commissioner and Commercial Councillor of India, Head of Advantage Austria. Hans, welcome on stage. Our third panelist is Oliver Woolley, CEO and co-founder of Investors, UK endorsing body. Oliver, please, can we have you on stage? Hi, Oliver. Our fourth panelist is Dr. Najla Omar Yusuf Jaleem Al-Dukhi, Director of Marketing and Government Communication, General Directorate of Residence and Foreign Affairs, UAE. Please welcome Dr. Najla on stage. And ladies and gentlemen, last but not the least, please welcome Seema Bhardwaj, Director, India, Germany, Trade and Invest.
Good to have you with us, Seema.
Stage is all yours, Ridhima. Over to you again.
Thank you for that, Ashima. Welcome to our lovely panel. Thank you so much once again for taking our time and joining us. I think it's just fair that we go around the panel and we take about 20 seconds to introduce ourselves before we get talking about what is happening in each of your lovely regions. But if I could begin with you, Ada, please.
Working?
Yes. If I could just request you to keep it a slightly closer.
I think it will be closer, it will be better. Thank you so much for inviting me here. I'm really, really honored to be here and represent in the Polish Chamber of Commerce. I've been living in India for the past 10 years, supporting Poland-India business relations in the various of roles. Formerly, I was representing Polish Investment and Trade Agency, and I was dealing with a lot of investors and a lot of interest from Polish investors and Indian investors to come to Poland. I'm very glad to be here, and I'm very looking forward to know what's going to happen during this panel discussion. Thank you so much.
Equally glad to have you here. Please, why don't we take 20 seconds to just introduce ourselves.
Okay, good afternoon to everybody. Hans-Jörg Hörtnagel, Austrian Trade Commissioner in India since last 4 years. And just as it's one of the greatest times being in India, we have every year a new export record, but also import record, a lot of investments going on. And as I said, great pleasure being here.
Lovely. Oliver, please go ahead.
Thank you very much. I'm not actually from the UK government, but we have a 6-year contract with the UK government to manage the Innovative Business Founder visa for founders coming to the UK. Investors, which matches entrepreneurs with investors, we've got sort of 2 parts. We've got an investment community of around 4,000 investors with a leading investor network in the UK for the last 10 years. And on the other side, we have the visa business, where we are an approved endorser for the UK government for the Innovative Business Founder visa. And the connection between the two is that we're looking to support and help businesses and founders which are innovative, scalable, and viable to help them to come to the UK.
Lovely. Dr. Najla, please.
I'm happy to be here today with you in this dialogue. My name is Dr. Najla Al-Douhi. I'm Director of Marketing and Government Communication in GDRFA Dubai, which is Dubai Immigration.
Lovely. Seema, we'll give you the final word.
Yes, good afternoon from my side. My name is Seema Bharadwaj. I'm Director India for Germany Trade and Invest. From profession, I'm a lawyer. So in my earlier life, before GTI, I was working as a lawyer, helping German-speaking companies to come to India. So in my current role, my main job is to help Indian companies to explore Germany and help use soft land in Germany. So we are the Economic Development Agency and of the Federal Republic of Germany, since we are paid by the German taxpayer. So we are here to support companies from here, and that's my role since 2021, and we are based in Mumbai.
Lovely. So we'll have 5 very different perspectives from Poland, Austria, UK, UAE to Germany. So I think it's going to be a fascinating conversation. But Ada, let me begin with you. And this is something that I want to go across the panel once again. Let's start by understanding maybe 1 or 2 parameters that you all keep as a checklist when you look at what a good fit is for your country, right? It might be a good fit on paper for another market, might not work for you, right? So let's begin with you, Ada, trying to understand for an entrepreneur. Give me 1 or 2 that makes it a good fit as far as Poland is concerned.
It's a very interesting question, and also previous speakers were speaking a lot about this, and I'm just wondering what else I can add. When it comes to Poland, we are centrally located, and the economy is really thriving. So it's important to check and think about new markets. We were speaking about Australia, about Middle East, about African countries, but I've never had someone mentioning before Central European countries. So what's important is to check, look at the markets that maybe are not so obvious. And I would strongly advise you to look at Poland, a member of the European Union for the past 21 years, and do a good market research and have business advisors or have someone on site or someone here who can guide you and go through what's the network, how to connect the dots over there. It's just very in short answer what I think the checklist requires. First of all, of course, the market analysis, a good person, good advisor who can help you, who knows the people, because everything is about knowing the right person. And the opportunities like here, like right now, I think they're great for that.
Absolutely. Hans, other than liking schnitzel, what makes someone a good fit for Australia? But jokes apart, give me a checklist of, say, one or two that makes an entrepreneur a great fit as far as Australia is concerned.
Well, first of all, from our experience, you don't invest into a country. You invest in a company. And we have a lot of hidden champions. We have a lot of companies which are there for generations. We are very strong in technical niche areas, so we're not so strong in consumer products. We only have Red Bull energy drink. Everybody thinks it's from the US, no, it's from Austria, made in Austria. We have Swarovski. But the rest is all technology supply. So if an Austrian, let's say an Indian company wants to go entrepreneurs to Austria, it's in their product line. For example, we are strong in automotive industry. So I just came back from Pune. We met Bajaj. They invested or they bought to cover KTM, which is one of the world market leaders in sport motorcycles. Just now took them 100%. And it's a brand. It's a worth brand, 70 billion euros. So they invest in that. So you look what is in your area and where are these companies. And then, of course, it's a beautiful country, as I said. And besides the technical areas, let's say we do a lot with startups. We bring startup companies to Austria. We had seven delegations. We had this year 70 persons participating in Vienna. And we want to promote Austria as a hub for the German-speaking country because we give a lot of incentives. We are in the heart of Europe. We are landlocked. We are well connected with Germany. We then very close interconnected. We are a small market. We are not a big consumer market. So a lot of products go via Germany. So Hamburg, Slovenia, they are the major harbors. Rotterdam comes in. So many products you export to Europe or to Germany ends up in Austria. So it's a small consumer market. So focus more on the tech areas. And I said interesting for startups because we give a lot of incentives. And this we want to promote, and we have special connections to the Eastern European countries like Poland, for example. So it's a good choice also. So consider this.
Lovely, Oliver. Please go ahead.
Well, the UK is also a very lovely country, although it rains a lot, I have to say. It's snowing at the moment, so I'm very happy to be here. But through our work with the government's visa program, to come to the UK, there are actually 3 very distinct requirements, if I'm allowed an extra one, and that's being innovative, viable, and scalable. And these are 3 very well-defined components that we look for Indian companies looking to come to the UK. So we deal in technology, AI businesses, and non-AI businesses. Actually, we just had our first AI business go bust. So whether or not that's a bubble coming to an end, who knows? But from creative industries and others. So that's what we're looking for.
Very specific. I hope the founders are listening. But Dr. Najla, please go ahead.
UAE is a great country also. Okay, in Dubai, the entrepreneurs who are the best fit for those who bring serious long-term commitment, understand our regulation culture, and embrace transparency, compliance, and innovation. We have a clear and predictable residency and identity systems that makes the city especially attractive for founders who want to scale responsibly. We see the strongest growth in future-focused sectors, advanced technology, AI-driven solutions, digital trade, sustainable industries, and knowledge-based fields. Entrepreneurs who align with these priorities integrate faster and create meaningful and sustainable impact. For tailored residency options, founders can visit the official GDRFA website and they can get more information about Golden Visa.
Sure, we'll talk about the Golden Visa in just a bit, but Dr. Najla, I'll also request you to keep the microphone slightly closer next time when you're answering, so it'll be easier for the audience to hear. But Seema, please go ahead.
Yes, thank you. Well, all what is said is as Germany is offering. So there's one thing called in German, it is called Unternehmertum. So that's called entrepreneurship, which means any business, if you see an opportunity, Germany welcomes you. So now talking about the opportunities, what we see in the past 4 or 5 years I've been here is in the field of digitalization, health, renewable energies, anything which you see I think these are the common topics which we all have. The world has changed a lot. So Germany is offering in this area, anyone who wants to do business, first of all, is about the huge market which we have. It is, when you are in India, you are not actually scared of numbers, but when you are in Europe, talking about Germany is like almost 25% of the population of Europe is in Germany. 20% of the GDP is in Germany. Germany is right at the heart of Europe, both Poland, we have in the south Austria, and of course Switzerland. Then in the north we have a huge port, and the west part as well. So you have to come with a business idea, be open, and Germany is ready to absorb. And all the new topics which we have, as I mentioned already, it's more about what our colleague Oliver said here, scalability, innovation is all very much welcome in Germany.
Lovely. So let's now talk specific market to market. Ada, I want to begin with you. Of course, I'm trying to understand from the perspective of Indian companies trying to expand in each of your respective markets, right? So let's begin with Poland. Help me understand from an Indian company perspective trying to expand their foothold in Poland. What are some of the policy initiatives of government-led schemes that are making it easier for Indian companies very specifically to expand in Poland?
Please also keep in mind what I mentioned before, that now is negotiated EU-India FTA, and it's one of the final stages. So hopefully all this bilateral business is going to be easier. When it comes to Poland, first of all, we have a direct flight connection. I would say it's very important. Since 2021, it's way more easier to come to explore. I always advise and I always encourage Indian companies to come and visit Poland and see themselves what the country is about. Yes, many companies say that language barriers, they don't know much about Poland, and we are not enough visible in India. That's true, and I'm aware of that. I'm trying to change it. But what is important, I feel, is the human-to-human connection. We have great investors from India, TCS, Infosys. We have Lumel. I mean, it was acquired by the Indian investor Rishabh, and they are successful over there. So what I think is the most important is to try and explore and try to see and get to know a little bit about the country. What is important for the founders to keep in mind is that we have Polish Investment and Trade Agency, that is agency dedicated to help investors. This is the one that is like centrally governed, and you can always reach out. We have also special economic zones, and please remember also we have special economic zones, depends from the region. Poland is of course smaller than India, but we have very strong different regions that work a lot to attract businesses and to attract investors. So it's good to look, like I say the same things to Polish companies looking at India to invest. Do not think about India as one country. Look about one city maybe, or a state, or even, you know, like a region that you want to focus on. Poland is smaller, but it's the same method. Look at specific region that offers incentives, and then try to look at the way how you can use the governmental support and the funds that are already there. We definitely look at the investors, because Poland is really, the economic growth is really impressive. We speak about Poland being a champion of Europe. I know it's a bit of maybe exaggeration, but when we look at the numbers of the economic growth of Poland, we're going to have 3% next year. Right now it's 2.9, which is a lot comparing to some other European countries. I'm not going to point out on which one are our neighbors, for example, just 1%. So we look for new investors, we look for new energy, and I think India can provide it, and Indian founders and Indian companies then definitely can offer that.
How lovely. Thank you for that, Ada. But let me move to you, Hans, and try and understand something similar, again, from a government-led initiative or policy, trying to make it easier for Indian companies. But I want to understand the next step also. It's not just expansion, say, in the European markets, but there's also this always sword on your head that I want to lower my risk as well. So are these initiatives specific to helping these companies in expansion, but also understanding that they would be concerned about risk as well?
Well, first of all, talking about financial incentives, there are no financial incentives, because my experience, if you get financial incentives, this is equalization some disadvantages. So in that way, there are no disadvantages. But of course, you have a perfect business environment, same like Germany. in the center of Europe. You have a strong business community there. And I think it's important for Indian companies, and especially, for example, IT sector, and this, I think, for most of our countries here, our problems, our situations. So in Austria, we have high energy costs. We have a shrinking population. We need young people. And if you find a business model in that, you know, addressing the aging society, skill development, working at that, then, but this is, as I said, for most of our countries. And we're doing a lot with startups. And I have friends from Jodhpur, and they went on a startup trip to Austria. And now they love the country, and they want to do something there, and still thinking. And I think it's against economics, you know, but I think it's still, if you love a region, any of our countries, then you put more effort in it. So I think that's a good point, analyzing it, studying it. So in that way, we have incentives. It's a framework, a safe framework, it's a small market, a central market. Just find it out and analyze.
Okay, lovely. Oliver, I'll tweak my question very specifically to you because the interest of the founders would be for United Kingdom as part of the innovator visa, right? It's called the UK's innovator founder visa, if I got that right. So I want to understand from, again, a founder perspective, what makes a great application, right? I'm sure there are certain parameters. While this is on everybody's checklist and wish list, help us understand in terms from, again, a founder perspective, what makes a great application.
Yeah, thank you. It's the Innovator Business Founder Visa, just as and it's relatively new. It's only been going for 2 years, but it's a growing, fantastic visa. It's for 3 years, and then if you meet certain criteria, you get what's called indefinite leave to remain. And the criteria are, as I said, very specific. They're to be innovative, and when we say innovative, there has to be some sort of competitive advantage. That means if you come to the UK, you're going to be able to build and grow a business and compete against people already there, viable and scalable. And please speak to me or you can look at me on LinkedIn. By the way, my name is spelled with 2 L's, Woolley, just if you're going to, very happy to link in with you. So it's, and you know, we're open for business and really, really keen to have the best tech companies and creative and non-tech companies, innovative companies come to the UK, and we can take you through the process. We've got a fantastic community, around 2,000 applications we've processed. About 30% of them are women. We've got a very growing women's founder and investor community that's developing. So it's you do have to be a good company. But like others, we're nothing, you know, we're 60 million people. We've got 2 million people in the UK of Indian origin. So we welcome people with open arms, and we'd love to find out more from anyone interested.
Lovely. Taking on from what a bit of all the panelists have said till now, that it's not just about entering or expanding a market, right? It's trying to understand the pulse of that local market that you're entering. So help me understand from UAE's perspective, not just entering or expanding into the UAE, how do you understand the ground pulse of what you need locally? This could be onboarding, this could be hiring, this could be understanding the competitive skills. So help me understand some of these factors when you're trying to either enter the UAE or expand in UAE.
Thank you. It is a very important question. Founders should start by understanding the regulations. There is framework for licensing, residency requirements, and basic compliance. This builds immediate credibility and makes setup faster in Dubai. Their journey essentially begins at the Dubai airport, let's say, where Dubai offers some of the world's most advanced entry systems. We are using AI now. I think all of you heard about the red carpet. This is one of our projects, and also the smart gates and dedicated pathways for priority categories. So at the end, I want just to emphasize that the best important thing, understand the regulations once you come to UAE.
Yeah, understanding regulations. I think that is something that, in fact, has been resonated with each of these representatives, that understanding local regulations, that will also help with what Dr. Najla started by saying, that you'll have a long-term foothold in that region as well. Seema, let me come to you first. Thank you for patiently waiting. From a German perspective, again, if you're looking to understand operations, expand operations, how are there policies, initiatives from the German perspective that is helping in these talent pathways, visas, skilled workforce, so on and so forth as you move forward?
Okay, so one part which I would like to cover in the beginning is with regards to when you're entering the German market, or in general, or any market.
Yeah.
What I have seen in the past 3 years is it is important to connect with your embassies, either here or in the country where you are going. Because what I have seen in my practice is if they would not be able to help you immediately, they can guide you. This is first, which I would like to say. And secondly is, we have seen most of the time the companies coming to us, approaching the government organization. One is the visa issue, when there's a problem. And second is about, we didn't know that, where to go. So many incentives or information, when we're talking about regulations as well, it's very relevant. Just connect them. Connect with the government organizations. We have these here and there as well. Speak with them. If they cannot, as I said, help you immediately, they can guide you there. So one is this, and if you take an informed decision where you're going, one point is this. Then there are various now coming about the idea about what kind of incentives which we spoke of. So Germany in general, as Hans-Jörg said, it's similar. So there are not some actions which, like PIL in India, we provide everyone 15% or whatever. These are not there. So it's a different kind of a landscape and ecosystem, wherein the government says, okay, if you are coming in certain regions, if you are coming from a certain sector, then, or you are investing in R&D, then there are tailor-made programs for that. So it could be as big as, let's say, when Tesla was coming to Germany. So for every euro they spend, they could get 25% back. So it's that level. If we are talking about, then again, we have a second program about startups, which is called the Digital Hub Initiative. Therein you have these startups wherein all the hubs work together. There are VCs, there are companies there, and you have the startups there. So you have an ecosystem wherein you can work. And accordingly, you can also complement each other, and you get, then comes the question about the visa. What kind of visa you're looking at? So one of the visas which quite a few founders don't know is about opportunity card, which is you can just apply for it and go there and see, is this market for me, depending on what you're doing. And in general, when we say about at the level of between the two governments, we have Mobility Migration Act, which has been there, which is regard to health workers in the health field. The government is doing quite a lot at both levels. So that is one point I would say, inform yourself before you're entering the market.
Yeah, sure. Hans, please.
Just made that, I mean, all our countries, so European countries, of course, we have like Invest India, so investment promotion agents which happen. We all have export promotion systems. We have a unified OECD system, export financing. So really get support there. Then we have a network of trade commissioners, embassies abroad, which help when you establish a company there, and they really help you to go to other markets, to European markets, to foreign markets. So there's really a help system there, which sometimes you don't find like this to this extent in India.
Okay, great. It's good to understand the various initiatives that we're seeing various governments come up with, but I think the consensus again is that you need to understand each local market and their regulations separately before you try and enter them. But let me go the other way around, at the other end of the spectrum, Ada, which is that we've spoken about what they shouldn't do. What should they do? But maybe some success stories of Indian companies that have managed to do really well in the Polish market. Why don't you give us a case study of what they've done right, so that could maybe become a stepping stone for companies looking to expand as far as the Polish market is concerned?
Yeah, I will add on that. There's no chance for Jugad or Chaltahe anymore. Maybe in the 90s in Poland, when we were just starting with the new democratic system, maybe it was possible, and that's how some of the companies were operating in Poland. But right now, it's better to be prepared and find a good local partner. When it comes to investment, I would mention again Lumel and Reshop Company. It's a company based in Nasic. And I had the pleasure to visit Nasic and also meet the team in Poland and the team in India, because they acquired a Polish company and they brought a know-how from India, but they also used the know-how which was already there and the employees and the labor which was already there in Poland. And they invested a lot in the factory. It's in southern Poland, not very the region which is not I would say very much developed, or it was quite an interesting choice, and it's very far from the bigger cities. But they managed to do it, and they hire Indian managers also over there, and they use the local force. And this is the way of acquiring or making a joint ventures, because then you can combine. Of course, it's a matter of trust. It's a matter of maybe years of building the relationship. But if you make it, Polish and Indians are similar. We really value the friendship. We really value when we can count on the business partner. We have similar ideas of inviting Indian partners to our homes to celebrate together. So this is many things in common, despite different languages. That might be sometimes an issue, but Polish people, they do speak English, and if not, they are enough trying to convince you to do business with them enough well to make it happen. So I usually, what I like to support the idea of having a joint venture this way. It's always easy at the beginning, and maybe then expand more and start your own business in Poland from the scratch.
How lovely to hear that, sometimes we all work with stereotypes, right? That language could be such a big barrier. But as Ida is saying, that look at beyond the language of some of our core values could be very, very similar, and that could help you expand and enter the market as well. But also what Ada said is something very, very fascinating for each of these markets and regions, which is that don't just have an idea on paper of which market you want to enter, but also look at the long-term cooperation that both of these markets and countries wish to have. And Hans, that is something that I want to understand. What is the view of the Austrian government as far as a long-term cooperation with India is concerned? Now, of course, we're talking at a time when there is great innovation happening, whether it's tech, it's R&D. So I want to understand what is the Austrian government's perspective as far as a longer friendship and cooperation with India is concerned.
Well, of course, there are a lot of areas. I mean, besides the normal traditional areas, I mean, basically the Indian steel industry had been built up with Austrian technology. So we always have been, as mentioned before, a serious provider to the Indian industry. We are in many technical niche areas. We are market leaders in hydropower plants here. We are market leaders in the railway infrastructure here. We are market leaders, or one of the leaders in the automotive supply industry. So there were many areas where we have been serious providers. Or, for example, when you firefighting vehicles, so 80% of the Indian airports, when you travel, they are Austrian firefighting vehicles helping your safety. So there are many areas. No? On second area, as we discussed before, of course, is startups. We know all the potential of India, and there's, of course, a huge, enormous potential there. And as I said before, understanding the aging society there, the problems we are having, so this can be really a good match for both sides. Another area, of course, we see potentially is skill development. I mean, you have a huge, of course, young people, but of course, it should be fit to the Austrian, German system and so on. So there we would like to find ways how to cooperate it. And yeah, I think this is the basic areas we see the future and we are working on.
Lovely. I want to understand something now as a common... Sure,
as I just add one area is more and more universities coming to here to invite Indian students going there. And we just had a meeting at the embassy. For example, there's Montana University in Leoben. They are top 20 in the world for mining industry. And basically, the costs are zero. You just pay a few hundred euros, and say maybe in Germany. And they ask him, why are you doing this? And say, why don't you make a business model? Say, no, we want to provide something for society. And we really must explain the Indian families why it's so cheap. They think it's just a cheap course, but it's true. Hardly you pay anything there for education. So and this is what we want. So they can start. So the youngsters, when they finish, they can come back. They can stay. There's a lot of opportunities for both sides. And this is for most countries.
Lovely. You know, what we're also trying to achieve with this conversation is trying to give the founders in the audience and those who are going to see us in the episode eventually is that, is there a sort of a playbook in terms of what they should prioritize when they're entering a market? And I'll ask the same question to all of you. Oliver, I'll begin with you. Founders entering the United Kingdom, some practical steps that they should prioritize. And I'm going to ask this in a very specific sector because it's not just the idea and the intent that they're entering with, but also to have a long-term credibility with the market that they're entering.
Yes, it's a very good question. I mean, I keep coming back to this, for the UK market, we're looking at viable, scalable, and innovative. To give you an example, I think you're looking at examples. We have Insia, who developed adaptive clothing for people with physical disabilities, and she's done incredibly well, and she's got some patents in the UK. Also, we have over $100 billion worth of grants through the Innovate UK grant. They're not easy to get, but they're there. And out of the 600 people we've endorsed, about over 200 have got grants from Innovate UK. Another example, I've just had a buzz to say that England have got a wicket in the cricket, which is very exciting, I have to say. India much better than cricket than we are. But we have a someone who developed cricket analysis software to improve bowling techniques, which we desperately need, I have to say. So, so those are sort of two examples, but we've got sort of 600 examples that we can share to give people an idea.
Sure, sure. Dr. Najla, what about you?
There are many examples in UAE. Maybe Farki, one of them.
Sure,
and
please.
Lulu Markets.
Sure.
Is one of the best, let's say, model from India to UAE. I think we have a lot, maybe of even for software investments and AI for this time. This is the most things for in UAE.
Lovely. Seema, what about you? Some practical steps that they should prioritize when entering the German market that will help them build credibility in the next few years?
Again, so one thing is, first of all, any step for anyone, which is much cheaper and cost effective, is to visit your country's, your sector-specific fairs. So Germany has many leading fairs which are happening. One, I would suggest that then you know the ecosystem. Secondly, many of the companies who come to us, they say, there are various forms of setting up in Germany. So they would say, oh, I'll just maybe set up a company which is called a €1 company. So you just need €1. Of course, you can do it. But I would always say, if you're sending the signals to Germany, then send up a GmbH, which is equivalent to a private limited company. Since you're doing business, and one thing is always the fact, maybe if you say we are setting up a company in €1, it doesn't make much sense. It is actually meant for the local startups who are there. But that is one thing I would say, plan your steps ahead and then set up a GmbH and set the right signals. Rather wait for a while and visit, as I said, many fairs, and we have many fairs here as well, wherein we have European Union is having a huge delegation and they are present in the major sectors here. So this is one thing. One point I would like to add here is with regards to language. Poland said, and also in Austrian companies, which we are saying. So this is also a huge business opportunity. So we have recently, I think I can take the name of the company. So that's borderless. So they are providing healthcare, skilled migration to Germany as well. They came to us last year and have set up a company. And since they require this, they're actually supplying healthcare professionals to Germany. And the fact was that the problem is you cannot learn the language quite fast. And since they are in the healthcare field, this company has developed an app wherein they learn the healthcare specific app, and which is actually, they are learning on ground and helping the hospitals and many of the old age institutions as well. They are growing so fast already. So they have seen an opportunity there. And second point about the language, I would say if you talk with any one of us, the referrals are there very strong, and language is not as such a problem as it is perceived. So that is from my side as of now.
Lovely. Oliver, I want to come back to you now. I want to understand again from the perspective of initiatives in the United Kingdom. The UK has public support, grants, maybe some sort of tax relief also for early investors, right? But talk to me about maybe one or two programs that actually end up creating some sort of an exceptional difference as far as these early investors who are entering the United Kingdom.
Well, that's a very good question. We have in the UK a tax initiative for investors. It's called the Enterprise Investment Scheme. So if you're a private investor, if you invest £10,000 into a company, you get 30% back from the government. So that's you get £3,000 back. So the net amount is 7,000. If the business then goes bust, you then get another 30% back, so another £3,000 back. If the business doesn't go bust, any gain is free of capital gains tax and inheritance tax. So, and I know other places don't have tax, but from a tax perspective, there's huge benefits for investors. In the UK, you have to be a UK investor and investing into a UK company.
Okay, lovely. Dr. Najla, now I want to spend a little time with you, specifically as far as the big talking point, which is the golden visa. Yes. While, of course, much has been written and spoken about it, I want to begin from the basics and backwards, actually. Before we get into what can you do in terms of long-term investment and planning, again, from a founder perspective, what should they first know before applying? Because I think there is this big, maybe misconception, if I'm using the right word, that anybody who applies gets it. Help us first demystify that for entrepreneurs and founders.
Yes, sure. Some believe that golden visa is granted exclusively for major investors. No. We can get, it's actually available for wide range categories, such as entrepreneurs, researchers, doctors, experts, and outstanding students also. So even your son or daughter can have a golden visa. Some applicants are unaware of the requirement of the documents, achievements, or professional indicators that validate their eligibility. So you have to know that. We constantly work through government communication channels to clarify the criteria and remove any ambiguity about that, ensuring that everyone eligible can benefit. So to know more about that, you have to go to our website, GDRFA Dubai, to get the right information, and even our social media, GDRFA Dubai, and that would be clear for you to know and not to be illegal when you reach Dubai.
Okay. Now I want to ask you the other aspect, which is, how is the golden visa working in the favor, or how is it helping long-term founders? This is something that you said when you introduced UAE to us, that you should have a long-term goal in your mind, right? So help us understand, how's the golden visa aligning that with the vision of long-term founders and also maybe highly skilled talent as well?
See, we are in UAE working in a system. There is no something personalized. So you must all know that when you will arrive to UAE, there is a system for golden visa. You can get your rights about the golden visa. So once you are applying, you must know what documents you have to apply. And then you have to know what is your rights. There is a lot of rights for golden visa in UAE. There is, let's say, 5 years visa, 10 years visa. So you have to understand which type of visa is suitable for you. At the end, I can't say or explain for each one because there is a lot of types of visas. Maybe the website can explain more about that.
Yeah. Before I move to Seema, I just want to ask you one more on this because, as I said, there's a lot of curiosity around this, which is that one mistake that you see that is being made while applying for the golden visa. I think that would also help a lot of founders here.
Yes. One of the most common mistakes among new companies is delaying consideration of compliance and residency until after operations begin. So you have to start from the beginning. In reality, compliance is an essential part of building business from day one. So you have to start from day one. Don't wait until you become illegal or your team become illegal. Companies must understand the requirements for issuing residencies for their teams. and the importance of continuously updating employee data. This is the main important thing. And establishment's responsibilities regarding health insurance, contracts, and legal obligations. We, on our side, GDRFA, provide systems and services that help manage these obligations with ease.
Okay, lovely. So I think that became a good recap of sorts also for you to understand when you're applying for a golden visa, what will make your application shine and the mistakes that you need to avoid as well. But Seema, I want to come to you now and understand again in terms of public support, what is happening in terms of national incentives and others that are actually making a lot of difference as far as the fastest growing companies that are concerned that are trying to enter Germany.
Okay, so there are no, it's a tailor-made sort of incentives which we are happening. One thing which I would say is, which you don't need kind of incentives in any way, is that you find the right location. That's very important. Germany is, like India, a federal country. So each state has their own programs. Each municipality had their own program. Why taxation, since you mentioned, is just if you just are looking at the right location, could reduce your corporate tax right in the beginning. So location is what you call in Germany, A and O is the expression. So it's very relevant. Let's say if you go to Frankfurt, quite a few companies go there. So if you're going to the main city, general taxation will be in terms of OECD countries, which is around 30%. So if you move maybe to a municipality which is 30 kilometers further, your tax could be as low as 22%. This holds true. So that's, yeah, there's no some maths there. It's just at see to it where the location is going to be. So it makes a huge difference for Germany. So the part of taxation system is one is general corporate tax, and the rest 15% is so-called trade tax. And that is one thing which I always tell anyone, don't look for it, but look for initially where you are setting up your company. Second part is with regards to, since EU and India FTA is going to take place, most of the incentives are at EU level, federal level, state level, municipal level. So it keeps on changing, and it's changed, first of all, is the criteria allocation, which sector you are going in, and what kind of grants are you going to get it. It is both the grants, incentives, fundings which are happening. So more east you go, the lesser taxes you have to pay, more grants you get. Yeah. And as you know, Germany is working towards sustainability goals. We have a coal phase-out regions. They are spread in whole of Germany. And if you're setting up companies there are quite a few incentives the government is providing. So it's not one thing, let's say, okay, everyone is getting 15% off. It's just that you have to find out where you are in. Yeah. And second aspect is Germany stresses very much strongly on R&D. So just to give you the numbers, how much Germany stresses, like whole R&D spending of Germany is equivalent to UK and France together. And we talk about state of Bavaria, the R&D spending there is equivalent to Poland, Spain, and Greece together. So any company who is looking to develop further, looking at any kind of research and development, that's very much welcome, and huge grants are available there, and huge state support is also available there. So not one question is there, come and talk to us, we'll help you. And a very relevant part is, since we are paid by the taxpayer, it's free and confidential. So reach out, you will gain, nothing to lose.
Nothing to lose. I think that's the beauty of events like these, that you have representation that is so varied and you have access to these founders as well. Because we're running out of time, I'm going to take one last question to all of you. It's going to be a common question so that we can begin to understand how each of your countries approaching it. We're talking at a time when there are a lot of geo-economic trends that are shifting, right? So I want to understand from each of your countries' perspective, how are they approaching these shifting trends as they look at investment, as they look at trade, as they look at partnership going forward? Ada, we'll begin with you.
I actually started with it, so stable economy, and Poland that is a successful story of the economic growth. So this is important, despite the fact that we had difficult history, that we have a neighbor that has very difficult situation, that we support Ukraine and do a lot for the Ukrainian people and for the refugees who found shelter in Poland. but still the economy is growing, and that's what I would like you to check and see and remember, that it's interesting because look where we started from and how it is right now. I would say my life has been, I was born already in the democratic Poland, so it is possible within one generation to see a great economic growth that can attract new countries, new investors, because we didn't have, let's say 10 years ago, many investors from abroad, like from Asian countries, let's say from India. But when you go there now, you can look at for example, what we do in the Polish Chamber of Commerce. We have the headquarters in Warsaw, and the president is from India.
Sure.
And the local community of people from India support and thrive with their businesses. So it's always good to reach out to the organizations that are already present there, but also to the communities or the or people who've been there for many, many years and can support you in your journey.
Lovely. Hans, what about you?
Well, of course, we all know this a geopolitical change, and I think for all European countries, European Union, India becomes more and more important, and there's a complete reorientation. So now Austrian companies, we look more and more India as a sourcing country. So there are no major new investments in China. We look for these opportunities. So in that, we know all the investments here. So it becomes, as I said, important as a country, as a partner country, as a sourcing country. And we all hope that this free trade agreement will go through, and this will be a new basis for further cooperations. And before ending, just a little bit of tourism promotion, because you asked me about Schnitzel. So at the moment, you have every month 20,000 Indian tourists going to Austria, plus 20%. And I would invite you, don't go only to the city. Go to the valleys. It's beautiful, especially in the summer. You can enjoy 1,500 perfect temperature. We have waterfalls, which are good for the lungs. We also have whiskey there, Indian meals, a lot of Indian restaurants, so please enjoy that. And with that, I finish.
Lovely. Oliver, what about you?
Well, we have whiskey too in Scotland, I'd like to point out. Well, first of all, UK, India, such a strong bond. It's not just cricket. It's over here, we've just had Sakir Starmer and your Prime Minister with the signing the free trade agreement between the UK and India. So there's massive and huge strong bonds. We're excited to be here because we are witnessing some fantastic founders coming from India. So if you do want to speak to myself or my colleague Billy, who's going to stand up and wave. There he is. So we're not just looking for the Virat Kohlis and the Ben Stokes of the founder world. We want great innovative founders to come to the UK.
Lovely. Dr. Najla, please.
Yes. As we all know, business movement have been changed globally. So, and talents move faster than ever. So given to UAE's position and role in global economy, it was essential to evolve identity and residency policies even in the line with the dynamics of geo-economic landscape. So major shifts included enhancing entry and residency flexibility for various categories of talents and investors, and developing long-term residency programs to attract high-value minds and investment in UAE.
Lovely. Seema, I'll give you the final word.
All right, when we talk of whiskey, we also have very good German whiskies and also valleys. Yes, Scotch. Yes, no, it's not there. Okay. So coming to your point, which you initially raised, was about the ecosystems, which Germany is an export-oriented country, like very much, and we are very much affected by that. So the question is then suddenly arises, which I think it's surprising every month, every week, what's happening. So our mindset has changed. Now, one thing what we have been seeing, like we thought Brexit happened. Quite a few companies said, oh, let's look at Europe. And that's what we gained. COVID happened. Yeah. Then they said, okay, we have to diversify our supply chains. And this is also happening. And this is not just one way when we spoke of. What we have gained is quite a few students going to UK coming to us. And since Hans, you have already mentioned, the universities does not cost. So there's a huge influx of Indian students coming to Germany. As I think latest is around from 20,000 to 60,000 students are there in Germany. So we gain, if UK or US says we don't want them, we said, come here. That is one thing. And second is about quite a few number of Indian companies. And then again, I will just connect the point to language. Yeah. So I have had few Indian companies who the owners, when we talk of English, they don't speak English. Yeah. So they said, okay, my English is not very good, but they are doing very well in Germany. They have set up their warehouses in Germany. They are saying centrally located and doing the business. The business is going quite well for them. That is one thing which we are in, you see new ideas, how to broaden up your horizons and how to talk about it. So this is what this situation, what you have spoken of, has come up. And third point I'm saying is just be open, and we are here to change your perspectives. Just open up, not just geo-economic, otherwise also look at the various areas, Poland, Austria, UK is already there, UAE, and then Germany as well. So look at it, and we are all anyway, if you're in Europe, we are all working towards the same goals.
Yeah.
And yeah, we are there to help you and support. Thank
Lovely.
you.
I think that really is the way to just try and wrap this conversation, that maybe your perspective was different on paper, and post this conversation, we've managed to change it just a little bit. Such fascinating conversations from Poland, Austria, UK, UAE, and Germany. Let's have a huge round of applause, ladies and gentlemen, as we thank this absolute stellar panel. I'd also like to apologize to the audience that due to the lack of time, we've not been able to take any questions. We'll try and accommodate this with the next conversation, but thank you for being such a stellar audience, and thank you for the conversation once again.
Thank you very much, panelists and Ridhima, for that insightful session. Ladies and gentlemen, it's now time for a short tea break. We would also take this time to request the founders of all the select 200 companies to step out and find your way towards Rani Bagh, where we will be clicking our masterpiece, the select 200 photograph of DGEMS 2025. Meanwhile, for the guests, please enjoy some high tea, recharge, and get ready for more stellar conversations. Ladies and gentlemen, welcome back to the Forbes India D Globalist Entrepreneur Mobility Summit 2025. I hope everyone is recharged after that short break. There's something to be said about the Delhi winters and a hot cup of chai. And now it's time for our next power-packed panel titled Select 200 Alumni Perspectives on Building Globally Relevant Companies. This discussion will highlight real experiences, lessons from international markets, and the power of the DGEMS alumni network in enabling continued growth. And to moderate this session, please welcome back on stage Ridhima Bhatnagar. Ridhima, welcome back on stage. Big round of applause for Ridhima. And joining her on stage, please welcome our first panelist, Vipul Agarwal, founder Mogafi. Vipul, can we have you on stage, please? And please welcome Sunil Gupta, co-founder QNU Labs. Over to you, Ridhima.
Thank you so much. Can I request both of you to just swap so it'll be easier for the audience to have a name and face in alignment as well? No, just behind, it's just easier. And I think we can have a louder round of applause, ladies and gentlemen. I think we're all refreshed and recharged after that break. Please have a seat. Thank you so much. Gentlemen, thank you so much for taking our time and joining us. We just clicked a very beautiful picture with the Select 200. I'm sure that would have brought up fond memories. But let me first begin by just understanding what being in that Select 200 really means and how it changes life afterwards, right? Why don't I begin with you to try and understand how has life changed after being in Select 200?
Hi, everyone. So actually, it provided us the visibility and the validation, right? And it also sort of built the credibility for us when we went in front of the international clients, right? And so I think these were the key things. And it also helped us, I would say, benchmark us with the global players and see that where we are, and helped us redefine and recalibrate our own scale-up strategy.
Vipul, what about you?
Yeah, no, for me, largely, I believe when you call being lucky, it's all about knowing more people, being at the more places where a lot of people are talking sense. So this brings that community where you are talking to a lot of people, you get exposed to new ideas, and you get to learn the trends before it happens. So I think that's what it brings me, and that's why any community that matters, and the community of people who are filled with entrepreneurs, VCs, and thought leaders is something that makes a lot of difference in how you grow.
So, Sunil, you said that it helped you gain credibility, especially internationally, right? Any specific opportunities or networks or doors that it opened for you and it became a bridge of sorts?
No, actually, in a couple of times it was referred by our, we were doing a round table with somebody and they referred that, oh, you have been in the Forbes Select 200. So I think people recognize that we were part of that club. I think that is a good, I would say, starting point.
Lovely. So let's now talk about some of the lessons that a lot of these founders can also take from the great alumni of what life changed for you post Select 200, and also how you've managed to use that in scaling up and opening new avenues as well, right? So Vipul, why don't I begin with you? A lot of people can't do what you've done with Mogafi, and the reason that I say that is because it's also not very easy, or usually a struggle, when you move from selling courses to building a full-fledged ecosystem, right? Something that you've managed to do with Mogafi. So help me understand, how did you make that transition, and how did you ensure that this very difficult proposition on paper became a reality?
I think for us, it's always about the entry point, right? When you're building for a long term, you know that things gonna shift as the market shifts, as you get to learn more about the audience. So courses at that point of time was a very right point for us to enter, because you're going to bring all the big faces who are going to come on the platform, on which a lot of these writers that you see writing on Mogafi today have been able to come, right? Because they see the credibility which Sunil talked about. Like when you see all these big writers giving you courses, it's become very easy for you to trust a new platform.
And once you are there on the platform, then it's about how the platform is converting you. And for us, the goal have not been that we want 10 million or 20 million users, but the goal was that how I can bring one user and get 1 million out of it. And that's what we have done. Like a writer who came like a couple of years back on our platform, we acquired him in 300 rupees. The writer eventually contributed like $30 million on the platform with the movie we released in June. So that's something which we admire to build instead of just focusing on the number of 10, 20, 30 million writers. So I think the journey from course to where we are today is a lot about learning every day and how the market grows and pulling all those learning in the product that you see what Mogafi turns out to be.
Sure. Sunil, from your perspective, I want to understand a very specific skepticism, if I can use that word. A lot of people see quantum security as being way too early, right? How do you change that perception? How do you change that skepticism? And then, of course, I'll talk about customer experience as well.
Yeah, a very good question. We faced that. We faced a lot of time this challenge. So typically, we brought it down to 3 key points. One is that this threat of quantum computing threat to the encryption security is not far away, right? So we told customers that the hackers are already harvesting your data and storing it so that they can break that in the near future when they get access to the quantum computers. So the idea was that don't wait for quantum computers to come. The problem is today. Problem is here, right? Second important point was that don't wait for the threat to mature and then do it. The winners are not the ones who have a lot of resources. Winners are the normally ones cybersecurity who start early, right? So you have to start early, and that will be the key for you. And third important aspect was that that you have to. It typically takes months to implement, years to implement, in fact. So it is not a flip switch, that one day you will say, okay, I'm deciding, and you flip the switch and it's done. You have to make decision, and you have to go through this whole journey. So it is very important that you have a plan, strategy in place, and understand that this is not a technology decision. It's a modern risk management. And it requires a strategic intent, right? So please make sure that you are proactive here and not reactive. Yeah.
Because you said that this is a now problem, right? This transpires you in convincing customers also that quantum safe systems are a now problem and not of the future. How does that convincing really happen?
Sorry, can you come again?
I'm saying, as you said, that the quantum safe systems is a now problem and not so much of the future. But that convincing, I'm sure, is a question that's raised by customers as well, right?
Yeah, I think the challenge is always, this was a new category, right?
Yeah.
So it was not about sales that much. It was more about evangelizing, making customer understand why this category matters, right? And then educating customer about the technology, about the use cases, and helping. See, what we do normally when you do evangelization, we also try to shape the narratives and also navigate the regulatory requirements. In cybersecurity, whenever you go from different markets, there is regulatory requirements. So we did all that. It was a very, very time-consuming exercise. And then we had to do it all the time, interacting not only with the technical buyers, but also the business buyers, right? So it's a continuous education that we have to do, and work closely with customer, identify use cases, and then show them early success. Yeah.
Interesting. Vipul, the other perspective that I want to understand from you is, and this is something that we see a lot of resonance with, a lot of founders and creators coming and saying that, how do you help us earn sustainably, right? How have you helped creators earn sustainably? How have you ensured that your platform aligns with that as well?
I think it varies on which creator are we talking about. Like for Mogafi, we cater largely to writers. And in India, by demand, by command, writers have not been paid in the right manner till date, right? So what we do today, we instead of going on a fixed fee basis, we always ensure that whatever revenues we are building out of that writer's work, we give a certain percentage back to them. So they are not just like get some money, like get 500,000 rupees, which is how the market works, and pay us the entire story. This is not how this system works. For us, if you're a writer, you come on the platform, you finish the story, we license the story in whatever form or manner across the world, and whatever money we are making out of the story, you get a percentage back to you. So you are not earning just on the day one when you written the story, but throughout your cycle. So writers who have written a story in 2021 are also earning today on the platform through some other licensing means, through other production means. And that's what's more ensured, like, and I say that in the world of AI, blockchain, it's all about an ownership economy. So you don't want to take that ownership away from them. So the more they feel that they are the part of it, the more they are happy and they're building more and more content on the platform.
So interesting. So not just from a Mugafi perspective, but also if you had to tell founders in the room that how do you create a revenue model that is sustainable, what would your suggestion be?
See, and this might be against, but SaaS, with GPT, with all these foundation models coming in, 10 years down the line, I believe SaaS could be in all these foundation platforms, so you don't have to build a SaaS particularly. The whole idea is that how you can carry any creator from the first SaaS platform you're building to what next you can give it to them. So on a platform like we take a SaaS revenue where you are paying for writing platform, and then you have a SaaS revenue where you want to check your story, the quality of the story, and then a licensing. So it's how many steps you can add once a writer's on your platform, once any creator's on your platform. So it's creating a multiple revenue stream, and that you can always do by learning and by working more closely with them. And that's possible when you don't focus on millions of creators on day one, but focus on 100 and figure out how these 100 can make large money. And then you try to replicate all that in form of product on the platform is what at least we have done on Mugafi, at Mugafi.
Just to follow up, any mistakes also that you see founders making when they're trying to get
shut
this
down many
recurring
projects.
revenue model?
I shut down many products. So in that all process, you make a lot of products which you think might be necessary, but when you try to scale them, they don't scale. The thing that you have to realize it fast, you have to shut it fast, and you have to realize it's a mistake. So I think the biggest mistake one can do is realizing it's not a mistake. So, yeah.
So knowing when it's a mistake and then trying to correct it, right? Okay. Sudhir, I want to ask you now, again, from your experience, we're also talking at a time when a lot of people are wanting to commercialize frontier tech, right? So again, from a very personal experience, I want to understand what should not just founders, but deep tech founders keep in mind when they're trying to commercialize this?
Yeah, I think that is always a challenge for deep tech because cycles are very long. Procurement cycles are very long. Regulatory framework and acceptance takes time, so you require patience. But 3 or 4 interesting points that that we, as a deep tech, eventually is important. One is that you don't wait for commercialization until the product is ready. So while your product is coming up, going to the market early, working with customer, identifying use cases, because what it allows us to refine your product as you go, rather than building a product and taking the to the market and then figuring out and then redoing it, right? So we want to make the loop very short, right? So that is one very important point. Second aspect that what I have learned is that assuming that our product will just be bought as it is, it doesn't happen. Typically, deep tech and especially in quantum security, your product actually fits into the existing ecosystem, right? So you have to, it is not about innovation, it is also about integration, right? That how are you understanding the ecosystem well? How are you building the right interfaces, easy integration wrappers? Because when we take a new technology, most of the customers are worried about long implementation cycles, a lot of fatigue, because everybody is doing so many, they're doing AI, they're doing a number of things. And now is another thing for them to implement. So they will be very happy if they see is an easy plug-in play, something that you've already built all the ready interfaces, and you have a very good understanding of the crypto infrastructure, for example, and you just have that, right? So that's, again, these 2 important points that I would say.
Lovely. The theme of this panel was that we not just learn from the alumni of Select 200, but we also understand that in 2025, what's a globally relevant company, right? Vipul, I want to understand from you, are there certain parameters and checklists, again, that distinguishes one from another when you're trying to make a globally relevant company?
See, again, it's all about execution. There's no certain parameters, and every company is should be, I would say, judged on different parameters because the business is different. For us, I think when it comes to expansion, we went to a GCC market, we went to a Korea market or US market. The one thing which was most important for us is that when you are in India, and I'm building like in the ecosystem the last 15 years now, so a lot of people knows me, they are aware who I am and what you are building, but the moment you enter a new market, there is a factor of unknown. You have to spend a lot of time over there in that market to be relevant, and I think that's the most important thing that you could do. You know, to build the trust in the community, to know that you are not here just for a one particular deal and you want to run off from here, but you really want to build in the ecosystem. So that's what we have done. Like, for example, when I have to build in Saudi, I spent almost 100 days last year living over there. You know, spent a lot of time finding a lot of these opportunities, opened a lot of partnerships. When you do this often, people realize that you are here and you are meant to stay here. So that's where you've been able to target the big deals, not just go after the smaller ones. And that's what happened with us. We're signing one of the biggest JV in that region now with one of the largest studio. And all those things, the most important parameter is just to be known in the market which are unknown to you and the market which you are unknown to.
Sunil, what about you?
So this question was about...
What makes a globally relevant company in 2025? Is there a certain parameter that distinguishes one from the other? I'll request you to keep the mic, please.
I think in our field, I would say that one of the key parameters is about having a local partner for market access, right? Because you have to have some rules to do that, right? That is very, very important, right? It's very difficult for a company from India to go and scale in new markets. So you want to have local partners. Understanding of regulatory framework is very, very important because that could make and break for you. And of course, having a sort of a value system, the company when you're setting up there, that matches the local culture, right? That also becomes very important, right? What about transparency and empowerment and other things that are required? So I think these are the three parameters in my view makes difference.
Lovely. Because we have lack of time also, before as I begin try taking concluding remarks from you gentlemen, Vipul, I have to understand this from you. Because we're at a gathering where we want a lot of learnings for the founders in the audience as well, right? So help me understand with that maybe one or two mistakes that you feel that a lot of founders underestimate when they're trying to enter a new market.
Same, being there, like, you know, a lot of time, like obviously local partner is important, but finding a right local partner needs you to be there. Like for example, hiring a right team for me over here. I spend a lot of time meeting a lot of these new people every day. If I'm not in the new market, if I don't know who these people are, how these people function, can they even work with me for a long term or not? That's only been possible if I'm spending a lot of time there. So the most important factor is just be there, spend a lot of time. First few days, few months, few weeks, gonna be like you feel like what are you doing over here? But when things start turning out, it eventually turns out you find the right partner which you can rely on, and then you can save a lot of the energy which you might waste in future.
Okay. Sunil, I'll ask you that same question again, but I just want to tweak it to understand, and I discussed this with my previous panel as well, that how do you identify which is the right market for you, right? It might be right on paper for someone else, but how do you identify that it's right for you? What are those parameters and checklists that you should make when you're trying to look for expansion?
Yeah, I think obviously the most important part is about where the consumers are, right? Because, and we call it TAM, right? Where the largest market exists. Because when you are in a niche area like us and we are creating a new category, the validation becomes very important, right? Because if you build something that nobody wants, then you don't want to spend too much time, before you learn that. So you want to go to the market which is ready, or I would say more ready than others, right? And so that is very important because we can quickly validate, you can pivot if you want to do. You don't want to waste time because time is the most important resource. And so that is one area. And second important is your network, right? So if I'm going to United States and I want to make sure that do I have that network of friends who can get me early pilots, who can get me connect to the right person I want to do. For example, when we started in US, I went and stayed with one of my friends, actually for a month, because he had done 2 or 3 exits successfully and he knew all the customers by name and he could pick up the phone and set up a meeting with me, for me. So I think these two are very, very important points in my view.
Yeah. How do you identify the right market?
Yeah, more or less same. One, what's the opportunity total TAMs look like, where the market is heading. For us, what's also matters is that because we target a certain segment, same thing, how much of those segments are basically in a lot of these markets, this segment has not even been taken care yet. So your competition is extremely low.
Yeah.
So it's very easy for you to go out and present yourself as one of the opportunities over there, and it's very, very high chances that you turn out to be a big deal over there. Instead of fighting in the market where already there's a crowded space and you're gonna enter as one of the other parallel person. And second is build network. Like before entering the place, like have SME and LinkedIn and all these social platforms allows you to go and meet people, share your ideas. So meet people. Sometimes a lot of these VCs that invested in you, basically they have a lot of network. So explore all those network that you have. And second, just figure out where the, like at least from an output point of view, where the least competitive market, which are higher opportunity available. That's how at least we have seen it to enter in few markets that we did.
Sure. So you said about this, and I'll try and conclude with this as well, but you said know when to pivot as well, especially when you're trying something new, it might not align with everyone. So quickly tell me, what is that turning point in a founder's head when you should make that decision that I need to pivot now?
So it's not very easy because founders are so passionate about their technology and product. So again, I said so it's very important that there's somebody in the founders team has to be very rational or has to be a little disassociate themselves from this. But I think the key points are this, that have you narrowed down the problem, right, up to the lowest level? A lot of time the problem is at a very high level, right? I think that's the reason sometimes we believe that, it's not a solution looking for a problem, right? So I think when the validation, when we get down to a point where we understand the problem to the lowest level, and then we validate that we are not serving that problem in totality. We are only at the probabilities. I say it's a dartboard. If you're not hit the bullseye, you're probably in the 6, 7, 8. A lot of people survive and say, okay, we can continue, but you can't capture the market if you want. You can be a fringe player by doing that. But if you really want to be the key player, then you have to hit the bullseye. And if you're not hitting it, you have to go back and pivot. It may not be a pivot as a complete pivot, but it could be a partial pivot at times. But I think the understanding customer and what the real problem is, and are you solving that or not?
I think that's very well put. I'll give you the final 30 seconds. This is what I asked Vipul also earlier, that one mistake that founders should avoid when they're entering a new market, or something that they underestimate when they're entering a new market.
Is underestimating the amount of time it takes to the new market, right? And preparing your organization, because when you're going to the new market, you want to make sure that your current organization is able to run the business. So making sure that going out is very easy, but it is very important that is your leadership team is in place. Have you ensured that the right people are doing the right roles and playing that empowerment to them, that let them do that. I think those are very important part, because a lot of work has to be done in-house, because what happens typically is when founder or CEO is there in the market, he is typically running the company, right? A lot of time it is not organized in the manner that you can go out and start doing that. And going out is not just take a flight and you go for 2 days and come back. At times you have to be there for months long. So I think building a solid organization and ensuring that it can run when you are there in some of the market doing partnerships, I think that is something underestimation of the effort it takes. I learned it hard way.
I'm sure you being extremely candid that the lessons that you learned it the hard way, you pass it on to the founders. But I think you said that very beautifully, that you need to know when to pivot. And also when we talk about expansion, not to forget that you need a team up and running in terms of structure, leadership, all of that, in alignment with the local regulations of that market as well. I apologize, that's all the time that we had, gentlemen. But thank you so much. This has been a very fascinating conversation. And I'm sure from the alumni to the next one, there'll be a lot to learn as well. So Sunil and Vipul, thank you so much. Let's have a huge round of applause, ladies and gentlemen, as we thank the lovely gentlemen, please. Thank you so much.
Thank you.
Thank you all for that power-packed session. Moving on, ladies and gentlemen, to our next session themed Global Scale, Global Capital, Building Investor-Backed Companies for Multi-Market Growth, addressing how companies evolve after the first global foothold and what global VCs expect for Series A and B and growth rounds across borders. Please join me in welcoming back on stage Forbes India's Neha Bothra to moderate this discussion. Neha, big round of applause for Neha, please. And joining Neha on stage, please welcome our first panelist. He's been there on stage earlier, Ron Levin, Managing Partner, Alumni Ventures, United States of America. Welcome, Ron. Our second panelist is Macy Inc., Founder and Managing Partner, Delight Capital, Singapore. Macy, welcome on stage. Please welcome our third panelist, Miriam Stillman, Partner, Tal Ventures, Israel. And last but not the least, please welcome Som Shubropal Chaudhary, Co-Founder, Partner, Bharat Innovation Fund Ventures, India. Over to you, Neha.
Hello, everyone. Are we up and awake? I know it's been a long afternoon, but hi. Some excitement, some energy, please. Right. Could I ask for a mic, please, to go around? All right. So can I have 2 volunteers, please, from the audience? Raise your hand. All right. We have 1 gentleman here, and we have 1 lady there. Great. So there's a mic coming to you, sir. Just give us a moment. Yeah. So it has been a very informative afternoon. We've had several panel discussions and we've tried to cover as much as possible. So what would you say is one big highlight, one big takeaway that you really found interesting today?
Since morning we have been attending these sessions. It's really enlightening to know how does one go global. In fact, we are a company which is having global footprint, but I'm only taking care of Indian market. So I think I've been exposed to all the aspects of,
sure,
going global, and there are certain things which I had never thought, so I'm just getting enlightened.
Yes, that's nice. Could you raise your hand, please? The mic will come to you. What would you say has been one big learning for you after all of this networking and, the panel discussions that we've had through the day?
First of all, we are very excited to be part of Select 200. Thanks, Forbes and D Globalist, for having us. The one thing, there are a couple of things, first of all, but one of the thing is that what we heard in the last panel itself was about how the alumni of DGEMS Select 225 utilized the platform and grew themselves outside the borders. That is something which is a direct learning, and we think, I could imagine myself sitting on the next DGEMS Select 226 on there and talking about our expansion to the newer batch.
Great. Yes, I think we'll make a note of that.
Thank you.
So really, this was to set the context, because what we are now going to discuss is about global scale. We are going to discuss about global capital, and all these are areas that are of big interest for all the founders sitting here, because you do have aspirations which go beyond the borders of India. So coming to you first, and in fact, if I could ask all of you to start by answering this one question, it's essentially to understand that what exactly do you look for when you are looking at many of these founders who want to raise funds globally, what is the one big factor that stands out for you?
Sure. Thank you. Appreciate you having me. Well, there's never any one thing. So I think you have to look at everything a little on its own merits. But we really look for companies that are very ambitious, that are thinking about, moonshot. So, venture capital is a power law business. So we invest in companies knowing that some of our investments will go to zero, but the idea is the ones that will be successful will be so hugely successful that they could potentially be so big to go public. So we are looking for that ambition, first of all, the large addressable market, which can, of course, be a global market, combined with something unique, a competitive moat, a defensible technology, combined with a team that doesn't just have the right idea, but understands how to scale a business. That's not always easy to prove, but we like to see what have you done in your past. Are you a very, very deep expert in this particular domain, and you really know this problem firsthand, and are so frustrated that no one else is solving it, that you're basically dedicating your life to solving this problem? Or have you been an entrepreneur and really understand just how difficult it is? I mean, you all as entrepreneurs know that you've pretty much signed up for one of the most difficult jobs in the world, which is to create and build a scalable business, or you wouldn't be here. So really that combination of grit and ambition with a very sound business idea is sort of the sweet spot of what we look for.
What would you say is your view when it comes to investing in borderless businesses?
I guess it's the same. As he said, venture is an outlier business, so the idea has to be really big. I guess what we abbreviate down to the 3 M's. The market has to be huge, the management team has to be great, and there has to be a really defensible moat that the company could indeed be able to defend itself against. Yeah.
Would you like to add to that?
So I agree with everything said here. I think that when we're looking at founder teams, we're looking specifically at grit and domain expertise. So we would love to see founders being able to answer almost any questions that we ask, and specifically for their targeted market. So if the market is healthcare, we would love them to understand how, and the market is, for example, US healthcare, as it's normally with Israeli startups, for example. We would love them to know everything about the US healthcare market, what the payers do, what the providers do, and the way that they are being compensated. We love people to really understand where they're heading. The other thing is that we love to learn about their approach of going to market. How do they plan to acquire their next customer? What are they willing to do to get into the door?
What has been your experience when Indian investors are having such global aspirations? What is your advice to them?
Sure. So, we are more of a deep tech investor, right? So, beyond all of the items that my co-panelists said, we obviously look for what is the deep tech moat or fort in those companies, right? In India, we will probably find 1 or 2 companies doing the same. How would they compete globally against 2, 3, 4 startups in Bay Area? Maybe 1 in Israel if it's cybersecurity and so forth, right? So at that point of time, what we look for, unfortunately, in many of these cases, the founder might not have all the answers, right? So that's when we kind of, to a certain extent, good founder, solid domain expertise, has probably 60, 70% of those answers sorted out, remaining 30%, because we come in at a slightly early stage, pre-series A seed stage, right? So we kind of work during the due diligence phase, right? Get a couple of advisors on helping them out, and try to frame up what should be the strategy and so forth moving forward. Okay, so that's how we kind of tend to invest. But unfortunately in that, while there's a vision, while there is a good understanding, many of those very specific answers are not there as yet, right? So we take that a bit of a risk, but on the technology side, right? So we take a bit of a risk on, say, on the GTM side of things. But on the technology side, many of these things have to be, to a certain extent, proven, right? Some kind of pilot, some kind of animal testing if it's deep science, and so forth.
Indeed, I do understand the point you are making about, not having all the answers yet, particularly at a time when there are so many moving parts globally. It's hard to be very certain. Coming to that, Ron, I have a question for you. How do you see the US-India corridor in terms of policy evolve, and what are the kind of startups that could actually benefit from this?
Yeah. Well, far be it from me to predict our current administration, which I don't know is a fair representation of...
We've seen a lot of flip-flops, for sure.
Yes, well, and I, being in this country, live with this every single day. So very, very hard as, a business person to make sound judgments in this climate, quite candidly. But nevertheless, I think in the long run, the partnership, the U.S.-India partnership is going to be extremely strong. I think we're very mission-aligned, very sort of entrepreneurial cultures. I mean, if you look at across all the countries of the world and regions of the world, I think U.S. and Israel stand out among the most entrepreneurial, the most technology savvy, the most ambitious about changing the world for the better. I would say I'm sort of I'm sort of an impact-focused investor, so I like solving problems when I invest. I think there's really a lot there, a lot of synergy. Our firm has invested in many Indian diaspora founders who are often based in the U.S. but have teams in India. So despite all of the political noise and geopolitics and whatever, I truly believe that this partnership is only going to grow. There's going to be more opportunity for collaboration. I hope that it just becomes easier. I know there are things that make it sort of harder for a U.S. investor to come to India. There's nothing that can't be overcome, but to the extent that there can be mutual understanding between the countries to make it easier in all directions for trade and for investment and all of those things, just reducing barriers will help everyone. And I think, in general, current situation aside, I do believe that there's mutual interest that will drive that end goal of actually increasing trade and investment between the countries.
Any specific sectors that will be good to exploit in these given circumstances?
Yeah, I mean, right now, there's a lot of focus on AI, of course, and how that's going to impact sort of companies that work across borders and what kind of collaboration and sharing. There's always some sort of nervousness and uncertainty and dancing around. But this is where the money is going right now, right? There is some kind of bubble here. We don't really know how much of a bubble or what the impact is going to be in the long run. We can all sort of speculate. But this is where a lot of the attention is. And beyond this, I think there's a lot of mutual interests around many different sectors. I think that really all sectors have the opportunity to grow, including trade of goods and so forth. If there's, if the governments can sort of align on sort of mutual goals to do that.
Macy, when I was interacting with several founders in this room, they all spoke about expanding to Singapore because it's a very strategic market that gives good access to the Southeast Asian market. Advise the founders in the room on how do they identify if what they are offering is a good fit for Singapore? How do they assess opportunities and understand if they are actually in a position to leverage those opportunities?
Yeah. I guess everyone is trying to think about Southeast Asia as a single market, and that's actually a fallacy because Southeast Asia, although it's the fifth largest economy in the world with more than 680 million people, in actual fact, it's extremely fragmented. And you're absolutely right. The key word, operative word for Singapore is access. I do know that many companies in China and indeed also the world actually employ what they call Singapore +1 strategy in going into Southeast Asia. So really using Singapore as a preferred regional hub and then going into the region. So it could be going into Indonesia, for some manufacturing, Malaysia for some manufacturing, but always using Singapore as the hub. And also, a simple thing like, financial regulation actually varies a lot across the whole region. But probably Singapore is the most least regulated financially, and Vietnam on the extreme probably the most. And so simple thing like revenue collection in the region can be a bit of a headache. So a lot of times people would use Singapore as the revenue collection hub, sign all the contracts via Singapore, collect the money via Singapore, and then it's also easier for you to repatriate money outside of into your individual countries as well. Singapore has long been the financial capital for raising money, and you might have seen recently, actually last 2 days, They've signed basically a dual listing agreement with NASDAQ. So hopefully, finally, we'll get some exits out of Singapore as well, because it's been embarrassing. We raised probably more than 3/4 of the money out of Southeast Asia, but less than 1% of the IPOs actually happened in Singapore. I know that's kind of like sad, but right now, hopefully with this, we get some exits coming through Singapore as well. Yeah.
That's interesting. Miriam, coming to you now. Israel, is known for turning deep tech pilots into long commercial contracts. What do you see as the key steps that founders should take to convert some of these early pilots into multi-year revenue relationships?
Yes, indeed, in deep tech, the main challenges and the risk are in the early stage and a bit less in the go-to-market, at least when you look at statistics. And in Israel, the government decided to go for de-risking deep tech. We have programs starting from 75% de-risking by the government, moving on at later stages to 50% and 25%. Some programs are doing it directly with the startups. Others are focusing on funds of funds, especially when they do deep tech investments. And I think overall, also when looking at today's changes with SaaS investments, or at least for venture capital, I think still SaaS is a good business, but not necessarily a venture business. I think that deep tech is the main way for VCs to go. And you can see that, for example, in Israel, one of Israeli's companies is today accountable for more than 50% of NVIDIA's revenue. Okay, so the company was called Mellanox, was acquired by NVIDIA, and today it's accountable for more than 50% of the revenue. So deep tech is definitely something we go for.
Indeed, deep tech is the buzzword of sorts. I think today we've only been hearing deep tech, AI, SaaS, and all of this. Tell me a bit about what is your advice to founders when they want to expand deep tech offerings globally. What should their go-to-market strategy be in those early stages? And how should they decide which country to venture into first?
Right. So it's not, it obviously depends on case to case, right? But overall, what you're going to see, most of our companies, they are B2B, right? And obviously, US becomes the largest market, right? For obvious reasons. But getting into the US market is not easy. What we typically do is, we do a lot of product market fit sitting out of India. The founder kind of goes over to US a couple of times, right? Tests out the product, talks with a couple of partners and so forth. Another big advantage what we have, say, sitting in Bangalore, is a lot of these multinational companies that have their R&D teams or significant amount of the teams out here. So establish a connect directly to the mothership, and getting at least a communication going becomes a lot easier, right? This is point number one. But you gotta have a very right product market fit, a very good presentations, and all of these pieces sorted out before you enter the US market. In India, what we have seen is customers are much more willing to test it out, even the product doesn't work in the first place. You can go back the next day and beg them to test it out again. In US, you are not going to get a second chance, right? So the product has to be at least a certain level of maturity before you go out. The second market, I think many of our startups have actually found success, is in the Middle East. They're willing customers, willing to experiment and so forth. In Southeast Asia, the problem becomes very fragmented market. Europe becomes a lot of fragmented market. And in Japan and Korea, they want a significant level of maturity before you get in, right? Unfortunately, on all of these markets, you need, right, either you go direct or you prefer to have a partner. Right? So these are the couple of challenges. And I won't recommend building up a sales team in US and Europe till the founder goes in a couple of times and gets one or two marquee names in those geos. That's when you kind of, take the sales head, build up the team, and grow from there. But those are challenges as well. What we have faced, unfortunately, is you hire a sales guy, head of sales. He comes from a fantastic background. The founder is sitting out in India, having 3 to 4 hours of time, right? Because of that doesn't work. 3 months down the road, 6 months down the road, the head of sales leaves, takes the entire team out, and you restart that from scratch. So you just lost almost a year. So those have been the challenges. In many cases, what we are now doing, especially for early stage companies, is getting a chief business officer or almost a co-founder out in Bay Area, right? Israel has done this beautifully. So we are trying to learn from Israel deep tech startups how they have done and trying to replicate that as well. Another big aspect which is coming out is Middle East, right? Very willing customer, be it UAE, be it Qatar, be it Saudi especially. Lot of good engagements out there.
Ron, I want to bring you in at this point and delve deeper into your perspective of being a founder as well as an investor. You've built TravelPerk, it went on to become a unicorn, and now you operate on the VC side. So with your experience as being an entrepreneur and now an investor, what would you advise founders in this room since you've been on both sides of the fence?
Yeah, well, I mean, there's probably a lot of things you could say about that, but, you know, kind of bringing in the founder perspective, kind of what went right. I mean, my journey, just for a little background, is I used to work at Booking.com in travel technology. I met a couple of co-founders there. We identified, you know, that Booking has a great platform, but is not really built for business travelers' needs. So we created TravelPerk. It's just recently rebranded as Perk. But it's been interesting to observe. Now, I was really only there in the early stages, but some of the things that went right early on, I guess there are a couple major things. One is that we actually pivoted. Our original business model was a little bit too avant-garde. It was a little too fast for the market, but it also wasn't a big enough dream. It wasn't a unicorn dream. And we had to learn that from talking to customers. So we had to go to market. So a lot of the lessons you can learn from a book like The Lean Startup about MVP, and you know, there's a concept, do things that don't scale. A lot of the early things that you have to do to learn. Well, we built a product that was barely usable, but we wanted feedback. So we gained a lot of feedback from customers early, and we took that and realized, okay, this was good to get feedback, but now what we really need to build is this. That was very important. So about 9 months into our journey, we actually pivoted and created a much bigger vision of what TravelPerk would become. That was one key. So the willingness to be agile around your idea, and even if you have a very strong thesis about what you need to build, get a lot of customer feedback as much as you can, as early on as you can, and if you need to shift, do it. Don't be afraid that people will doubt you. It's more important that you identify the market correctly and find that product market fit rather than going through many cycles and waste a lot of money and time building a product that customers don't actually want. So that's one thing. A second one, I won't go on with a whole list of 20 things, but a second one that's very important is to surround yourself with the right people and use all of your resources to find the right investors, the right advisors, the right partners, the right first employees. It's the people that are going to make this business. We had an early advisor who was very instrumental. And so for me, what that was is I went to look for, okay, who's someone who is in the same general category but not directly competing, but they're several years down the path, sort of in the direction of where we want to go. So we found the founder of another travel technology company that was a later stage company doing very well, not directly competing with what we did, who could help guide us and show us where we might hit roadblocks before we got there, and could also help use his network to help us as we were to grow. So those would just be two of the main pieces of advice I would give as a founder.
I'm sure this will be very useful for the audience in this room. Coming to you, Macy, and to delve deeper into your exposure in areas of artificial intelligence and real estate, what would you say are some underserved areas in Southeast Asia which can be potential areas of opportunity for founders who are looking to grow in that market?
I guess AI is on a tear in Southeast Asia. I think there was a recent internet report published which says that basically Southeast Asia is extremely AI knowledgeable. 3/4 of the workforce have been trained to use AI, and just under half actually use AI regularly, professionally, as well as personally. The biggest thing, of course, in terms of AI and real estate, the obvious is data centers. I mean, it's on a tear. So I think there's already some 4.6 gigawatt of data centers being built as we speak, and the growth forecast for Southeast Asia data centers is 180% growth, and that's higher than the rest of Asia Pac, which is at 120%. So the obvious thing is really data centers, and the hotspots are Singapore, although small, Johor in Malaysia, Klang Valley, as well as the new hotspots actually Thailand. So if you're doing anything in data centers, that's the one thing really to do. But beyond that, I guess, I mean, generally AI in Southeast Asia, financial services has always been a hot thing, and right now with AI, you can actually be able to do meaningful financial inclusion that's no longer considered as just a noble target, but costly one, but actually one that can be both, I guess, sustainable as well as lucrative. Because the thing is that for the unbanked, financial transactions are never absent, they're just invisible. But with AI, with informal data as well as formal data, structured as unstructured data, you can actually make all these count. And for the unbanked, to help them actually build a financial identity, one financial transaction at a time. And this is what we're really excited about. But gets back to the other point about what to do for Southeast Asia. Hiring salespeople, your first VPs is always the toughest to hire. And people always make the mistake of hiring someone from large credentialed company. Big mistake. Because if you're hiring someone from Oracle, Oracle sells itself. You don't need really to sell. So you really need someone who can actually sell your product, which nobody has heard of. So that is the key hire for you. And that's always a major mistake that most founders make, hiring someone with huge credentials, because generally that will not work out well.
Miriam, what would you say are some untapped opportunities which deep tech startups in India could look when it comes to collaboration on the innovation front with startups in Israel, for example?
So I think that we would love to see more opportunities on the energy side, more ideas about novel energy, maybe much cheaper energy. We would also love to see things in the space domain. We think that space is going to become huge in the next 10 years. And we don't see as many startups in this. For example, in Israel, they're kind of siloed in their own space. So they don't mingle as much with entrepreneurs and with the VCs, and we'd love to see that happen much more often. So if you're in energy and space, come talk to me.
If I could add to that, so because Singapore is so land scarce and so in need of data centers, there's this crazy idea about building data centers in space.
Yeah, we see that
So
idea coming to
tech,
life.
yeah,
Yes,
cool.
Including opportunities to move things into space quickly, efficiently, by sharing time, using special methods of actually moving things into space, not with missiles, and various ideas of this kind. And I know it sounds weird. It sounded weird to me at first. But then you realize it's going to happen one day, maybe quicker than we think. Similar to AI, just happened one day. People were thinking, well, yeah, it would happen one day, but not today, maybe in 10 years and 15 years, and one day you wake up and say, what? So this may happen with space too.
We invested in gas stations in space. I mean, technically hydrogen, but yes, all along those lines.
So, Shubhra, I want to come to you at this point. You know, we are talking about moving fast globally, you know, to make use of all these opportunities. But how do founders move in a way which is also steady in terms of making sure that what they are offering is of good quality? They are catering to customers in a way which will be sustainable. How do you balance the two? Go fast, go slow. How do you balance it?
So this has been a big dilemma, right? How fast do you move, right? Versus, so again, it's a question of which markets you're going after. So see, what we have seen so far is India is a perfect place for talent, right? And now with all these entire deep tech policy, the entire semiconductor mission, quantum mission, AI mission, it's a significant amount of early stage funding kind of flowing in, right? So when we started our fund, frankly speaking, these startups did not even have the seed capital. So we had to find ways and means to get them some capital. Then we were coming in pre-Series A. But that piece is kind of getting solved now. The biggest challenge for us is, at least in the deep tech and also in the AI space, the quantum of capital we have in India is still minuscule compared to US and other markets, right? So Series B, Series C is scanty. Most of our investments is still in the consumer domain, in the fintech domain. So this play is gonna happen in this decade or so, right? So then we have to, with the quantum of capital we raise, right, which is probably 1/10 of a Silicon Valley startup, right? Good news is frugal innovation is in our DNA. We are doing that. So getting to an early product market fit in $3 to $5 million, even for deep tech startups, is possible, and we have demonstrated that. The challenge happens that while your competitor in Silicon Valley is raising 50 million, 100 million, right? You are in the next stage raising 10 to 15 million, right? That's the biggest challenge. So you have to, obviously, your R&D is in India and so forth. So you have to narrow down your focus on areas that you can win. That becomes very selective. So you cannot go and start opening offices all over the world. Absolutely no, right? So maybe that's why I keep after, and all of our startups have struggled, right? Going into multiple markets at the same time and so forth. So we have kind of narrowed down on, let's focus on US and Middle East to start with, right? That's where proximity to the Middle East, good amount of capital access and so forth. Another big aspect what we have seen, as I keep mentioning, India is a perfect playground to test market, get it done frugally, do a bunch of pilots and so forth. But in India, as a B2B company, if you're scaling up, that becomes a challenge as well, right? Your customers, the B2B customers, are not willing to pay, right? So when you go outside, what we have seen is at least a 5 to 10x more with a similar kind of an effort. But building up the teams, it's costly. So my suggestion has always been, do the product market fit, find out a couple of customers, get to a couple of $1 million revenue, sitting in India, maybe with a skeleton team outside. Once you raise a $10, $15 million, that's when you kind of start expanding out in US and Middle East geos. The third, when you raise Series B, Series C, that's when you expand out in other geos.
Absolutely. I want to expand on this, and I do realize that each of you has touched upon it. You have spoken about what your core investment thesis is that guides your decisions. But to close the discussion, if I could come to each of you again to flesh this out, if you could tell us in detail and maybe also with an anecdote about what differentiates a startup that is able to scale up successfully at a global level and one which is not. And how this was actually decided when you were, evaluating it, the investment thesis, when it came to you. Ron, you could start.
Yeah, so we've seen all kinds of outcomes with international expansions, and it tends to be one of two scenarios when looking internationally. One, it's like an immediately adjacent country, for example, where it's very similar culturally, or two, it's because of a founder's background. For example, an Indian founder in the U.S. or something might go to India rather than Canada or something. But those scenarios can often work well. It has to be very organic, I think. So there needs to be a natural fit and a natural progression where you say, okay, it works in one market. Now the big test, does it scale? Is this global? And thankfully, a lot of technologies that we work with are globally scalable. If they can work in one place, they can work in another. Sometimes there's some language or cultural differentiation. But where it sometimes fails, we have one Middle Eastern company in e-commerce that moved into another country, and they were sort of offered some incentives from the local government. Oh, we could use that here, but then the government changed, and they changed their policies and their priorities, and it's kind of nobody's fault. What can you do? But those are sort of some of those bigger macro risks are where these things fail. It's not necessarily even that they haven't researched the market correctly, but sometimes you need to mitigate those risks and not necessarily put all your chips in a big global expansion. Do it a little bit at a time. Just make sure that it also will scale. So just think. And everyone's very ambitious, but when you start taking those risks of going global, just make sure to do it in a measured and sensible way, making sure that you really are prepared to scale into a new market.
So make sure to do it in a measured and sensible way. That's the takeaway from you. Macy, would you like to add to that?
Yeah, because VC is an outlier business, the biggest risk to us VC is a lack of imagination. So you as founders need to help us to see what you see so that we can go along with you. So we often invest in pre-revenue companies so basically they're still trying to figure things out. We try to invest at a time where we kind of understand what they're trying to do and then basically help them along. But in all the years I have been investing in startups, I can tell you honestly, there's not been a single startup that has gone from basically inception to exit on plan A. Usually it's plan B. Most times, more letters of the alphabet before we actually... plan C, D, hopefully not plan Z, but many, many alphabets before we actually get to exit. So pivot is not a bad word, provided you're pivoting for the right reason. But because we VCs lack imagination, please bring your VCs along. Tell them, don't surprise them. We hate surprises because each time a founder surprises us, it's always a bad surprise. The good surprises come very early. Good news comes very early. Bad news travels very late, and it's a bad surprise. So bring us along, tell us, and explain to us. So we've invested, for example, way back in a company that was trying to do chips for the optical network. After 9/11, that kind of disappeared completely. And the founders, because they knew the market so well, they say, hey guys, yeah, this 20 gig thing, no, it's not going to happen. But we found this small product, just a transimpedance amplifier that lots of customers want. Hey, it's not sexy, but it would work. So we said, fine, let's pivot, let's do that. And indeed they went and they exited. We invested in another company. They have this marvelous plan of collecting data through your data handsets to be able to predict at every point, including on the 30-story building, what's the quality of the network, so that they could help radio guys plan the network. But another customer sold that competitive product to Vodafone, which has global network. So that goes to your market right away. And so they had to pivot, and we had to support them to pivot, otherwise they died. So they pivoted well, they got bought up by JDSU. So never plan A, so pivot and gladly pivot.
So pivoting is not necessarily a bad thing, and be very imaginative when you go to a VC. That's the takeaway. Miriam, would you like to share yours?
Yeah, so if I can add a takeaway, I think that understanding the customer is a critical thing. And the customer can be two different people. It can be the user, and it can be the decision maker when we're talking about B2B, selling to corporations. So the customer, you have to understand exactly how he's going to use the system. What's his attention span? Is he willing to go through a long onboarding process? Is he sensitive to his time and exactly what he needs? But there is a situation where the decision maker is a totally different person. It can be a CFO, a CISO, absolutely other people, like a manager of a hospital. The radiologist, the nurse, they use the software, but the decision maker is the manager of the hospital. And you need to understand exactly how these people think and what should be the best approach. What's the right pricing? Because sometimes your product is too expensive and you need too many signatures. It's worth lowering the price, maybe dividing the products into various packages. This kind of thought makes your go-to-market much easier.
So getting the pricing right and understanding the preferences of your customer. Would you like to share yours?
So I think, see, to a certain extent, our problem is slightly different, I would probably say. See, when we choose a startup, because this is hardcore deep tech or AI, obviously we are doing the due diligence in terms of, does this technology has legs? That's where I think most of our time and so forth gets spent. And is it going to be competitive? So granted, in India, we can do it frugally and so forth. How does this stand kind of globally? By choice, what happens is most of these entrepreneurs that come to us, right, especially in the early stages, are techies, right, coming from research background and so forth. So unfortunately, what happens is, unless and until, so we like this concept of two co-founders, one focused on business, one focused on technology. If we just have two founders focused on technology, we tend to, at a very early stage, even during our due diligence phase, we try to bring our chief business officer in as quickly as possible, right? So especially for deep tech and AI startups from India, the biggest challenge has been global expansion, global GTM. And that's where, unfortunately or fortunately, most of the learnings kind of happen within the first couple of years. So you go and develop a product, get the right product market fit. The scale up is still a challenge. We are learning. We are doing multiple iterations learning. So that's where I think having a chief business officer, having a business-focused co-founder comes in really handy. That would probably be the things we are looking for. I think technology in India, we can solve any challenge, right? GTM is where the struggles happen.
So getting the GTM right. Thank you so much for your time. This was a very insightful panel discussion. We need to wrap it up. Thank you so much for being here.
Thank you.
Thank you, dear panelists, and Neha for that insightful session. Well, as we move towards the conclusion, ladies and gentlemen, our last session of the day themed Building Borderless Businesses, Strategies for Global Scale Capital and Partnerships from India's Next Global Leaders will cover insights on how to structure teams, capital, technology, and partnerships to scale across continents. And to lead this discussion, please welcome back on stage our moderator, Neha. Neha, welcome back on stage. And now let's invite our esteemed set of panelists. Please put your hands together for the first panelist, Rikant Pitti, co-founder Ease My Trip. Rikant, welcome on stage. A big round of applause for Rikant. Our second panelist is Shashank Kumar, co-founder Dehat. Shashank, can we have you on stage? And can we please keep the applause going? Our third panelist is Uttam Gowda, founder Captain Fresh. Uttam, yeah. And ladies and gentlemen, last but not the least, please welcome on stage Avinash Gothkindi, MD and CEO, Zaggle. Over to you, Neha.
So this is the concluding panel, and I'm sure it's going to be power-packed with a lot of insights, a lot of takeaways. So without any further ado, let's dive deep in. Let me first come with a common question to set the context for the discussion. It may sound very elementary, but I'm sure it will be of immense use to the audience here. How do you go about the process of raising funds from global investors? Starting with you.
Yeah, great. Thank you so much. This is the question which is very, very close to me. By the way, just to introduce myself, Rikant Pitti, I'm the CEO and the co-founder of easemattrip.com. To answer your question, I must tell you that, my philosophy around raising capital has been very, very simple. I have, built Ease My Trip without burning any money, without raising any capital. And that has somehow shaped my mindset around the capital. When I started Ease My Trip, so we did reach out to a couple of investors initially, but then we've been able to understand we are too early to reach out to the investors. And then that's how we have been able to understand, the value of the equity. And then we kept the equity, and then in 2021, we got listed and never raised any capital even till now. So we have been bootstrapped. So from the point of view of us, our filters has always been that we are focusing a lot on the unit economics. That's something which we generally believe upon. Then second is the repeat customers. So if you have repeat customers, then you would not really need to have external investors. I think your own customers becomes your investors. And then third is tech-enabled efficiency, wherein we believe that, that is something which is very much required to probably compete in this world. And, when I started my company, so at that time, it was always been a saying that, travel industry is a very competitive industry. And, nobody will be able to make money. But good to mention that, from the point of view of us being listed, being a unicorn at one point of time, and then, nobody was even believing that how we are making the money and how we're making the profits. But we have been able to educate the entire OT industry that, profitability is something which depends on your expenses, not really on your income. हमारे मारवाड़ी में कहावत है जितनी चादर हो उतना पैर पसारना चाहिए. So that is something which we generally believe upon. But yes, I do speak to a couple of global investors, and I always have 3 points in my mind whenever I probably speak to them. One is that macro clarity. So like from my point of view in travel industry, I've always been mentioning that travel industry is almost $1.3 trillion industry, which is massive. And that's the reason we call it as travel commerce separately. And digital commerce in travel is actually growing by 12 to 14% annually. So investors generally understand momentum a lot. Second point, which is there, which I always keep in my mind, is that you need to display clarity, and that clarity is not into the slides. That's into you. Your KPIs generally shows your strength, and that is where the investors believe upon you. Third is resilience, and I certainly believe that investors believe upon that how you are actually navigating your tough cycles. All businesses would have the easy and the tough cycles, right? So if you've been able to, go through your tough cycles in an easy way, I think that's where, you'll probably get a lot of attentions from the investors, and they generally look at very, very carefully about it. So overall, like if your intent and your discipline is actually getting into your numbers, I think, raising capital from global investors becomes more predictable.
More predictable, very comprehensive. Sashank, tell us, do you remember the first pitch, the very first pitch you made to a global investor?
I do.
Tell us more about it.
So our story is slightly different. In our case, we started Dehat back in 2011. And for first 8 years, we were completely bootstrapped. So imagine that in our first 8 years, we raised just 1 crore of equity investment. And then obviously after that, we managed to raise more than $200 million from different kind of investors. But going back to your question, so first pitch was still at a very early stage, maybe around 2015, 2016, when somebody asked that, tell me your vision. And I remember at that point of time, Dehat used to work with just 3,000 farmers. And we were very clear that, that we have to build world's largest farmer-first company. And that's why, again, we were not in a hurry. We wanted to win, or we wanted to discover the formula first to win the trust of the farmer. And that's where I think, again, it took us years to understand the ground level realities and those things. But in our view, 3,000 numbers used to be a great number. But when I answered that question that, that what's your vision, it took me a little while to take a large number, right? I mean, because I could get the sense that I was supposed to throw a very large number. That's what he was expecting. But it took me a few seconds to hold my nerves and everything. And I told him that, hey, so we want to work with 100,000 farmers. And he was like, what? So I said, yeah, 100,000 farmers. And he said that, hey, so India standalone has more than 140 million farmers, and you want just 100,000 farmers. I said, yeah, but obviously you can understand what would have happened after that, right? But at least we got a sense that whether it's 3,000 or 100,000, I think, but people really want to see the scalability or at least a large vision for sure. At that point of time, we were so focused downstream, which was important then, but the moment when we got the sense and confidence that now model seems working, then we started thinking really large, big, and more importantly, and hence we started thinking that how, again, the success around these thousands farmers can be taken to as many farmers as possible. It's just a matter of fact that today we work with 13 million farmers. And I wish that like somebody would ask me that, that what's your vision now?
Yes, did you also have a I wish I had said that moment when you made the first pitch?
Yeah, maybe one thing I think, congratulations to you to put together this panel, quite diverse, bootstrapped, we are all VC funded, again bootstrapped. So in my case, I think I had slightly unfair start because I used to raise capital for other entrepreneurs. I used to be an investment banker. So this whole, at least the design principle in terms of fundraise, which is the TAM needs to be big. You need to have a differentiated insight, and you need to have a founder market fit, right? Some of these things, at least textbook I know in terms of what it meant, right? That's how I started. But in our case, yes, it's a large TAM, and we thought that in a TAM, in an industry which is $600 billion globally, we could possibly start putting together something around technology which can disrupt the industry. And I also had this unfair advantage of working in this industry. So that's how this, at least the initial pitch came together, right? So I had a reasonable success to begin with. All around 5 years, we started in 2020. So today we do close to $1 billion in terms of our size. And it wouldn't have been this turbocharged if not for support from global investors. So that's really helped us in terms of doing some of these things. So to your question around, is there something that I could have done differently? Yeah, maybe when we had so much inflow of capital, we could have spent that more wisely.
So you didn't spend it wisely. What did you spend it on?
More wisely, I mean. No, of course, getting here needs some amount of right things to go. But Now that I know that we had raised so much amount of capital, we could have spent it a lot more wisely. So that's the thing about fundraising journey. But otherwise, to your main question around global investors, I think the thematic is the same. Large TAM, something differentiated, and you're the right person to connect all those dots. Right? Yeah, I think that's what's worked reasonably okay for us.
Avinash, you would be in a space which is very competitive. You already have players in this space that are doing reasonably well at the time you were trying to scale up. Tell me some difficult questions you were faced with from investors, and how did you play those?
Yeah, so thank you. I run a SaaS fintech, Zaggle. We are in the space of spend management, and we are a listed company like Rikant and Ease My Trip. So the space is not well understood in India. So that's the thing. If you look at ERPs 30 years ago, HRMS 20 years ago, CRM 10 years ago, we believe in 10 years, spend management would be a very established category where people would understand what spend management does for corporates. And we want to be the SAP of that space, at least in India, and a top 3 player globally. That's the aspiration in the next decade or so. So I think our challenge was slightly different. When we engaged with investors, we had taken quite a few contrarian bets. And we had to justify why we took a contrarian bet, whether it was sticking to not launching a wallet of ours in 2014. I remember vividly when my driver asked me, "Sir, hamara wallet kyun nahi hai?" And that was like a aha moment, because it told me that, you know, every Tom, Dick and Harry was doing a wallet, and we never figured out who's going to pay for that, right? The guy who's giving the money, the guy who's taking the money, and lo and behold, UPI came in, and a lot of wallet companies took a hit. So glad we didn't do it. So it was a series of things that we didn't necessarily do. Like Rikant mentioned, very profit focused. The back of my business card says frugal, nimble, humble. So first being frugal, so frugality is something that we are proud of. So those are things which sort of have held us in good stead. I think coming to global investors, as Uttam mentioned, it's not too different. The only thing is, when you're talking to global investors, the need to have a much more holistic view of the market that you're operating in, and what's your moat or right to win, sustainable over the course of a reasonable length of time, is, I think, more important than maybe when you're pitching to a domestic investor. But I think the domestic investors are also looking for those things.
Uttam, you know, something very interesting about your company is that you have tapped into the M&A route to grow relatively faster. What would you say are some do's and don'ts? In hindsight, what would you have avoided? What would you have done differently? And also, what do you think you did right to tap into the momentum?
Yeah. No, that's a great question, because that's something that has obviously been not easy for us in terms of executing. So stepping back and giving a little bit of context around who we are. So we are a global packaged food company. We sell seafood in the packaged format in the US and Europe. Very likely you walk into a retail store in Paris or in Spain or in Central Eastern Europe, or you have seafood in a restaurant in Boston, in New Jersey. Very likely that you may consume our product. And we source from more than 30 odd countries. India is one of our largest sourcing markets. Around 10-15% of our supply comes from India. Like I said, we are amongst the top 13-14 largest seafood companies in the world. Now, to be able to build this, the customer relationships, essentially, whether the restaurant chains in the US or the retail chains in Europe, the insight is that for an upstart like us from India, to convert a relationship in those markets is a very, very long gestation market. So when we decided to look at international markets, and that's where the best profit pools were, and this as a category is still very unorganized at a global level, and we believed we had the insights to put together a very organized form of seafood. So it's a globally relevant problem statement. getting customers was a really difficult thing, which is why we have chosen inorganic path to get the customers. Now that meant that we went out and acquired some brands in the US and Europe, which gave us the downstream access. Now acquiring the brands in the US, especially for a company like us, the question that we always got was, give us some examples of Indian companies that have done very well in packaged food space or in any touch and feel category, right? And it was really hard for us to really come up with any examples. Of course, India has done extremely well in software, services, now cloud, and of course, AI, etc. But in touch and feel categories, which are very staple, where customers have a very intimate relationship with, which they consume on a daily basis, there are very few Indian examples that are out there. Now, to be able to crack this and convince that, you know, we have the DNA and what it takes as a competency to make it happen, one of the biggest drivers was the culture. And at least the way we believed how our company should be positioned, which in my mind, it had to be truly global, where I wanted to behave like a global company. What it meant is, today, if you look at our company, we have around 500 people, but we are completely outnumbered by other nationalities. We have only under 200 Indians in the company. And each of these businesses that we have outside, we have very few Indians who are there, which means that when we do M&A, when the companies come into the fold, there is a very general sense of comfort that it's a truly global company and we are not going to do a lot of micromanaging after buying, because there is a little bit of Asian influence, not just Indian, Chinese as well, or Japanese as well. Whenever they've bought companies, they've gone into a other mold where they replace the team there and they take control of the nitty-gritties, nuts and bolts, right? Whereas we have taken the other extreme, wherein we have made owners of the companies that come into our fold. So we do acquisitions only if we have the CEOs willing to swap their ownership into Captain Fresh, which means that we are almost recruiting them as co-founders into the company rather than we controlling them, right? So that's been something that really worked for us in terms of the M&A strategy. So I say this very sincerely that last 2 years, people say that I have gone around the world with the shopping bag, buying more than half a dozen companies across US and Europe. But in reality, I have gone around selling Captain Fresh equity to these folks because they are the ones who have taken bet of my company and swapped their ownership. So the core of what I've done is sell my story and vision, not really buy them out. And I think that's something that's, of course, still a long way to go to say that it's worked out really well. But so far, for an Indian startup who's doing something for the first time in a touch and feel category, we've been in reasonably good space because of this strategy of, one, not touching them, getting the people right, and making them owners of the Indian stock rather than giving them exit.
That's refreshingly different, very unconventional approach. Coming to you, Shashank, you said you started with 3,000 farmers, and today you have 13 million farmers. How did you go about building trust in the farming community, and how did you onboard all these farmers in an area which is very different for farmers?
Well, so journey of DeHaat has been thoroughly bottom-up. And primarily because the way how we built our thesis for DeHaat, and as I mentioned earlier, that it was a very long-term perspective. And again, we had our thesis that once you win the trust with the farmers, eventually the same network is going to bring a lot of opportunities for you in form of different monetization opportunities and different revenue streams, both ways, to and fro, with respect to time. And then at the same time, we had our own gut feel that sooner or later, physical as well as digital connectivity of rural India will improve. And again, that motivated us to take an early bet. And that's the reason why we always put farmers in the center. And we never focused, we never talked about a specific crop or any specific offerings. So thought has always been around that how to maximize the touch point between us as an organization and the farmer, whether it's about selling them something or it's about buying from them something or it's just about giving them information. So that is one. And second is that whatever is the cost of digitization, don't miss the opportunity to capture the data, whether it's transactional or behavioral. I think these are the only two things which really helped us. And then obviously in rural India still, it's still about the word of mouth, right? So what happens that again, winning the trust of first few hundred farmers in any village or any pin code, it's still the challenge. But the good part is that again, I keep saying that in our business, so-called acquisition is very, very difficult, but retention is very easy once you acquire them. And because then they themselves become your ambassador. So long story short, that's why again, right since inception, we have been talking about building full stack, which is with the same farmer network, with the same farmer's household, what else we can do, right? Or what all we can do. And that's the reason why, again, model not just evolved, but again, I mean, it could scale up all around, right? I mean, so whichever crop they grow, they get to buy all the agricultural input, whether it's seeds or planting materials or nutrition and everything. Whichever crop they grow, over the time, we could build our own advisory engine with the help of data, with the help of technology. And then, of course, all these efforts eventually boil down to the offtake side when we source the produce from them. And then again, I mean, we make the necessary value addition and then we sell in the domestic as well as overseas market. And then obviously because of the network, because of the data, now with respect to time, we are adding more and more offerings for the same network of farmers, and the financial services is the most recent one. So the point is that again, with every incremental touch point with the farmer, not just you build or you bring operating leverage for the platform, but trust is just the byproduct as an outcome.
Mm-hmm. So you spoke about operating leverage. I want to take that point forward. Tell me a bit about Ease My Trip. How have you gone about building a robust operational backbone?
So basically, running a company which is profitable from day one, right? You generally start having a different mindset altogether. So basically, as we are currently growing in different markets, including US, UK, Middle East, and different other markets, right? For us, growth is very important, but profit is completely non-negotiable. So we are always driven by profit, as mentioned by Avinash, and then Uttam, and then everyone. I think we are all on the same page. Just to echo Avinash, so like they are also considering it to profit, so they have a platform wherein all the corporates, even the startups can come in and they can start having, their expense be managed. Similarly, Uttam is doing a lot of inorganic acquisitions. Similarly, we are also now getting into inorganic acquisitions. So we acquired more than 15 companies in different verticals. Even as a matter of fact, we are now even into insurance, we are into hospitality, we are also into bus operations, we are also into electric bus manufacturing, we are also into aviation. So I think probably for us, to be very honest, I certainly believe that, you need to have your core right and you to have different other, specifically sectors and different other companies or different other products to support your core. So as you may not be, able to raise the capital, but in the times like, we face the COVID time. COVID time, the world was standstill. Everybody knows that travel and tourism industry was the most impacted sector during that time. But just to tell you, right, so we were third largest before COVID. Just within the COVID, we did a lot of development in terms of customer, supremacy, customer efficiency, customer-centric efficiency, right? And so many things we've been done at that particular moment. So we come up as the second largest travel portal during that time. So, in terms of operations efficiency, I would say that, we generally take care of our customer complaints very seriously. So even many of the times, even I still go into the call center and I sit and take the calls whenever I have free time, because I feel that, I'll be able to understand my customer more better. And that's not something which I'm doing. Maybe you can just call in the call center sometimes. If you see anybody named as Vikas Ahuja, that's me. So I generally change my name and then I go over there, because I don't want the customers to know that I'm the founder, because then they will not be more vocal to speak to me. So in terms of Ease My Trip, when we are even going global, right? So there are a couple of learnings which I even have it, because I generally believe that, when you are actually entering a new market, it's very easy. But specifically, running the business which can scale and which can actually, do a good things over there without even breaking the system, it's also very important. So there are a couple of my learnings I certainly would like to share. One is that whenever you are building a company overseas, so you need to make sure that you have the right team with you. And by the meaning of right team, basically you need to have the kind of culture being placed so as, the people starts believing upon you. Number two, I believe that, every country would have their own culture. So you need to understand the culture very well. Like I started my operations in Dubai just 4 years back. So therein, I started with a retail, center, which I had never did in India. And I've been there and I started speaking to the customer, then being able to understand this market is a little bit different than what India is right now. India is more price conscious and Middle Eastern market is more service conscious. They won't want the services to be there. So that is where, I see that one of my learnings is there. And number three, which is very, very important, which I've still been finding the sweet spot, is actually, you need to probably find out the situation, how do you centralize and how do you decentralize? That's very, very important because, that's where I think that a lot of people who have been trying to go global, not been able to succeed. Because if you try to be more centralized in your approach, then you are slowing down your growth. If you are decentralizing, there could be a lot of, issues around, there could be leakages in the system and what all. So, finding the right spot between centralization and decentralization is very, very important. And I think these all things combined together probably, gives us some kind of strength because I started my company when I was 16 years old. Right now I'm 36, it's been 20 years. And maybe, I generally say when I probably retire, I'll probably be the most experienced travel and tourism professional in the world. And I believe that, if you probably would have the kind of experience, then you can literally go ahead and can replicate the business model which you are doing in multiple parts of the world. It probably becomes plug and play for you. So these are a few of the things I just wanted to share.
I also want to talk a bit about strategic partnerships, and if you can tell me how at Zaggle you've tapped into this, be it partnerships with startups or big corporates or banks. How have you gone about doing that to scale the business?
Yes, so in the category that we are as a fintech, the ecosystem demands that you partner with banks and networks, especially, right? We also partner with companies like EaseMyTrip to offer travel solutions to our customers. So the whole thesis of a company like Zaggle is that we have a variety of partnerships where we integrate through APIs, and that's become much easier in today's day and age with AI and other technologies kicking in. But I think it's, again, as Rikant mentioned, it's an organizational DNA thing. Are you trying to build everything yourself, or are you trying to leverage what the ecosystem offers you? And if you're trying to build everything yourself, I think in today's day and age, it's an incredibly hard model. I think we have got examples like Apple, for example, who's built an ecosystem like that, but for every Apple that succeeds, look at the numbers that don't. It's also industry dependent. You need to understand your industry. What are the dynamics of that industry? So in our space, you need those partnerships. And it's all about trust. It's all about creating win-wins. It's not easy to especially partner with large banks. It takes patience. It requires your understanding of what their point of view is. Banks, for example, more and more today, but even 13, 14 years ago when we started, for them the most important thing is their customer and the compliance, right? So their regulator and the customer both, probably the regulator first and then the customer. And if you're able to bring the confidence to the bank that you are going to make sure that the compliances are, top notch, your probability of getting a bank partner goes up. Today we have 19 bank partners. Each one of them sort of audits us once at least a year, and they speak to each other as well. So there is a certain virality that kicks in. And those are things which get built over time. So are you consistent? Is your say-do ratio close to 1, if not 100% 1? Then you're in a good space.
Just to take that point forward, how would you say you build long-term value in terms of the reward systems that you design? How do you ensure it is sustainable and it's actually value accretive for your partners?
See, ultimately, when you're looking at partners and you're saying, hey, I need to craft something, you need to understand what their needs are, right? And we do believe in a 51-49 partnership where we leave a little bit more for the partner, because that then ensures that you have a reputation where you're not somebody who's trying to take all value out of the ecosystem. In the short term, it may not be something which is great for you, but in the long term, it does become very, very powerful. The other thing also is each category of partner and each partner is different. You need to be able to map them. You need to understand the stakeholders that you're dealing with and craft your approach accordingly. Otherwise, if you try to do a cookie cutter approach, you're bound to fail in partnerships.
Could you tell us a bit more about your experience in developing local leadership rather than, planting leaders from one country, one zone into another country, another zone? How do you pick these leaders? Because you are placing an enormous amount of bet on ensuring that the operations continue seamlessly. How do you go about identifying these leaders? And have you had any experiences which have taught you a lesson or two?
Yeah. I think like what Rikant was saying, right? The people, culture, understanding the nuances of global cultures, very, very important. While I'll describe some of the things, maybe one tactical input could be, there's a book called Culture Map. It's one of the most powerful books that I have read for whoever business leader wanting to do business across multiple cultures. I would strongly recommend this culture map. I was also fortunate to be part of a class by that author. I was stepping back into Captain Fresh and philosophy of local leadership. First of all, why do we need that strategy, right? Why cannot I parachute Indians into all of these teams? And because ultimately, of course, we have some advantage. There is a reason why working with Indians who are kind of switched on 24/7. They are very, very easy with this hustle culture, right? It's so easy for founders like us to work with Indians. Why not that? It's simply because the problem statement we have chosen. The problem statement we have chosen is protein is a global mega trend, and seafood is possibly the most healthiest protein form out there. And globally, seafood does not enjoy the true status it needs to have, because there is no really large player who has attempted to make seafood a very user-friendly consumer product, right? That's the problem statement that we have undertaken. Now, by nature, the problem statement means that I need to be plugged into the customers that I'm serving. If it is a Mediterranean customer, I need to be plugged into it to really understand the nuances of those customers. And that's not something that I'll be able to parachute from India. It's something that I need to locally harvest. And if I need to get that talent, who is possibly the best consumer insight person from that geography, he or she needs to feel comfortable being part of our team, where it is completely meritocratic, it is fully inclusive. Like inclusion, it's a word that we use lightly, but for us to be truly, truly inclusive, there are so many subtle things. Like if I celebrate Diwali in a much more amplified manner compared to a Christmas, then I'm not inclusive. It's not necessarily that I'm doing anything wrong, but it's just that I'm projecting my background over a culture that we are trying to build. So there are a lot of these nuances that we should be carefully, we should be very careful about when we are crafting some of these. So that allows me to possibly get some of these talent. Second, I think I have believed in relating to this talent for a much longer period before really making that decision, saying that this is a team that needs to work with us. In some cases, it's 12 months, some cases 18 months. That's how I have operated. Because in a matter of 1 hour interview or 2 hours interview or maybe 4 or 5 meetings, at least I have not been successful in terms of finding these people,
to relate to them, to relate to their motivations, etc., why they should be part of our teams, right? Which is why acqui-hire as a concept has worked for us, which means that I'm talking about 6 or 7 such conversations, but extremely deep conversations which are spanning across 12, 18 months where we really know each other. The value systems are really aligned. And that's where the meeting of minds happen. And it's not necessarily about the mercenary relationship that you make money, I make money, and look, it makes sense, right? So that has worked for me, which is a very long, so to say, dating period to really understand each other's value system. And having skin in the game, which is, both ways. That's also something that's truly, truly important, having skin in the game on both sides. Now, these are some of the things that has worked for me. And there are some things that has not worked for me. So there was this one particular case, especially in Spain, where I had hired my senior leader, and in a year and a half, I realized that this is not going to work, and that separation cost me a lot because it was a massive severance payout. It became even a legal issue as well. It was a severance payout. Now, in that aspect, what I learned was essentially this cultural difference in communication. Simple things like what I realized, backdated, connecting the dots, is that there are certain cultures which are very different when it comes to exchanging feedbacks. Like people like us, Indians, we are all high context folks, where we are very abstract in our communication. We're not very direct. So our mode of communication, people actually think that we are actually saying positive things while we mean not so positive things. So these are some of the things that we had to work on at a cultural level, at my team level, at my HR team levels, that if I'm dealing with X country, there is a certain span in terms of how they operate. Like a Dutch, they're extremely direct, right? Like a Japanese, they are again very high context like us. There are a lot of cultural nuances. So simple things like if there is an appraisal meeting with a certain nationality, and if my tone of that entire meeting is so and so, it's amazing that somebody walks away thinking that they are the star, while you meant that actually you wanted to fire them, right? And I'm not exaggerating. This is actually happened.
That's unclear communication.
Yes, but that is really what happens in global businesses, right? It may sound extremely basic and hygiene, but to build a global business where today I have employees across 30, 40 nationalities, and also across the, so to say, IQ stream, right? Because the touch and feel business essentially means I need to have people on the ground, I need to have people about, right? It's not necessarily, let's say, ID services where you're, operating in a band of that stream, which also means that even the other person has a lot of those cultural nuances embedded. So that is what my learning and my input is. Anybody operating in the culture, in the international space, I think investing a good amount of time into understanding these aspects and even going back to academia for learning some of these may not be a bad investment.
Indeed, that's an eye-opener for everyone in the room here. Coming to you, Shashank, you spoke about the need to build trust at the grassroots level. Talk about a bit glitches that you faced or some other challenges that you encountered in the journey, and how did you address these as you scaled up the company?
On the farmer side or the market side?
On the market side.
On the market side, so again, I think so. One good thing happened in our case that we started our journey from the supply side, right? I mean, if you see the food chain, you'll find most of the people start from demand side, right? And then at success of scale, they think about backward integration. But in our case, it's other way around. And that's why at any given point of time, we firstly assessed ourselves in terms of where do we stand, in terms of quality or quantity of the supply. And hence, we are relevant for which specific market or buyer segment. And that's where, again, converting or identifying those buyers, again, it was never a challenge for us. For example, today, every day we aggregate almost 10,000 metric ton of produce. And then 2 years ago, when we realized that, again, this overall annual volume, it's growing by almost 30, 40% on year-on-year basis. So we really need to diversify the market. And that's when we started diversifying from domestic to overseas, right? So still, as on date, almost 86% of our business, it comes from the domestic market when we sell the raw or the fresh or the processed farm produce to the retail chains, quick commerce, FMCG players or e-com players. But then at the same time, 2 years ago, when we started targeting overseas buyers as well. The learning or the challenge was obviously when you change the market segment and the buyer segment, so then you need to acquire certain skill set. And when we started targeting overseas market, I think that was a point when we had to put a lot of effort, right? I mean, because the expectation of global buyers, such as maybe like Tesco and Walmart, is entirely different from the buyers we have in India, right? And then at the same time, again, we didn't have DNA to serve the overseas market. And again, unlike Uttam, we build everything organically here. And at the same time, 100% sourcing is India. So that means, again, you had to sell produce from India, but at the same time with 100% trust in terms of quality, in terms of certification, and the trust, to trust towards the fulfillment. In terms of consistency of quality or quantity. So then we had to put a lot of effort to acquire those skill sets and understanding the expectation of the buyers, right? In terms of whatever, regardless of the uncertainty in terms of currency or logistic, right? I mean, if you have committed, then you have to deliver, right? I mean, so, and that's the only way you can maximize your wallet share with those buyers. Then at the same time, the service, right? I mean, while you are supplying most of the produce in bulk, few in your brand, few in their brand, but then at the same time, the overall, the service is also important. It's not just the supplying the produce, right? And in terms of the right communication, regardless of the time zone differences or so. But yes, the good part is that all those things were one-time task or one-time effort for us. Thankfully, I think we could learn. And that's the reason why, as on date, as we speak, we export directly to 40 different countries, to almost all the premium retail stores directly from farmers. So we keep saying Gaon se global.
Yeah. Gaon se global, yes, that's a nice way to put it. Coming to you, last question before we close the panel. You said you started at 16, right? And you've gone far beyond ticketing at Ease My Trip. So how do you see embedded products, be it insurance or be it buy now, pay later, or something like, loyalty points, shaping the next phase of global travel and commerce?
So basically, I would like to start by saying that, travel is not at all now only about tickets or vouchers. It has literally gone far beyond than that. And that is where the embedded products is actually creating a lot of revenue streams for my company as well. And that is the reason when I mentioned that, we are into different sectors, be in hospitality, be into insurance, or even thinking to get into foreign exchange as well. So we're not doing everything on our own. So like Uttam mentioned, so wherein, you probably have the people who would probably, have a vision in your company. So specifically not really getting the people just to probably, buy their company 100%. So even we believe in either taking 49% or 51% of the company, or maybe 20%, 30% of the company, and we can probably embed their products and services within our customer base. For example, we have got 40 million customers. And those 40 million customers are actually the audience which really matters. Because those are the people who stays in 5 stars. Those are the people who literally takes domestic or international flights. Some of them are taking business class, some are taking economy class. So I certainly believe that, these embedded products, like if I'll take an example of insurance. Insurance, overall attachment in my own ecosystem of flights is almost around 15 to 18%. So it is generally building a lot of revenue streams, and it also been building a lot of streams wherein the customer is actually thinking that we are giving a good experience, that the customer is not going outside to buy an insurance product. Similarly, foreign exchange. It's quite a problematic situation for a customer to buy a ticket or buy a hotel separately and go to a foreign exchange and then buy for, the currency or probably, a card from there. So therein, I see that there is a lot of value. You talk about loyalty, right? So loyalty is definitely what we have been using for a very long time. We have got 90% repeat rate. So that's never been heard of. We started with the model of no convenience fees. So that is what we started way back in 2006 when we established the company, and then 2008 EaseMyTrip was born. So therein, I certainly feel these embedded products are something which is going to make a lot of sense for the companies like me or everybody over here. And in our new avatar, we have called it as EaseMyTrip 2.0. So therein, we are actually creating an experience wherein the customer is not really looking to buy these products as an add-on product. It will be the part of journey. So as the experience of buying those products will be much better and much smoother. So that is where I feel, and when you talk about when I was 16 years old and I started the company, to be very honest, I just wanted to add upon Uttam was mentioning about the culture. Just wanted to add, there is definitely culture of the customer or the people in a particular country which you need to figure out, but there is definitely a culture of an organization as well. And in the culture of the organization, you may be having a frugal way of working, like everybody over here would probably be the one. Similarly, you would have some short-term goals, long-term goals, and one specific thing which has always been there in my mind, that I love to learn. When I was 16 years, I didn't have an experience. I used to, get the people, take their interviews, learn what they're doing in their company, and then try to implement that, and that is what even I'm still doing it on a continuous basis. So I certainly believe that, while hiring the people, even as a matter of fact, so we do a lot of mistakes by giving a rosy picture, which you are not actually there. You give a rosy picture about the culture of the company. We should probably take that into our mindset that we should not do it. Either we leave the employee, and especially when you're going global, you need a country head. And I've done that kind of mistakes. I've hired 2 country heads in UAE. Then unfortunately, we could not, gel up together because, while initiating, I give a very rosy picture of the culture. It's an MNC, you would probably be loving the culture and everything, but then suddenly the person identified that we are a frugal company. It's not really a relaxed mode, so you have to work very hard. So I think that is where I certainly would like to add upon that culture of the organization should be taught very, very carefully and should be given a very good clarity to the employees which you are hiring.
Absolutely. On that note, we'll wrap the discussion. We are completely out of time. Thank you so much for being a part of the discussion. Very insightful. And thank you, audience. You've been absolutely fabulous. Thank you.
Thank you very much, Neha and the panelists, for such an insightful session. Well, ladies and gentlemen, as we draw the curtains on DGEMS 2025, today has reaffirmed one powerful truth, that Indian entrepreneurs are not just thinking global, they are building global. From visionary founders and global investors to policymakers shaping new corridors of growth, every conversation today reflected ambition, resilience, and collaboration. DGEMS is more than a summit. It is a global movement empowering the next generation of borderless businesses. Thank you for being a part of this inspiring journey, and here's to scaling new frontiers together. We now welcome you to Rani Bagh for an evening of dinner, drinks, and live music. Also, I would request everyone to collect a memento from the registration desk on the way to Rani Bagh. And I would also request to select 200 founders who haven't given their media bites yet to kindly reach the designated area for their bites. Thank you very much. Have a great evening ahead.